Hello and welcome back. Hope you're good, doing well. And I hope that you guys can hear me and we are having a perfect sound on your end. Okay, guys, so let's move on for the upcoming, for next week, weekly market outlook, for next week setups. But before going to look at that, if anyone want to join us, just simply go to wave-trader.com or you can go to techtradingacademy.com. All right, so either one. So go to there and check the membership levels, and you can join us from there. What you're gonna get? You're gonna get the membership where you're gonna have access to the training, stuff, and plus you're gonna have access to the membership. All right, so the private group membership where I share setups every day, and every time when I see that there are opportunities just farming in the market, so I share opportunities over there in the private group, so you can get training and plus trading as well. All right, so go to the membership levels and you can see membership over there. And if you are looking for further information, just simply fill that form and send that form to me for further information. All right. So do you hear me, guys, on the YouTube? Just type it over there. It's working. If you're gonna send that, you're gonna get reply. So just type it over there. Yes, you can hear me. So then we're gonna go. Yep, that's great. Yes, thank you very much. Welcome after a long time. Thank you. Let's go on. Okay, first of all, we are going to see CPI numbers next week. That's really important data, right? So before going to look at the setups, you need to understand that this is very, very important data. Next week is going to release at 1:30 and at 12 April at 1:30, right? And the previous previous number was 6, and right now they are expecting that inflation gonna fall up to 5.2%. Okay, so if I'm gonna look at the if I'm gonna look at the trend, okay, so the trend is going down on the inflation. Inflation is falling from the peak from 9%. All right, and as we can see that the expectation is 5.2. All right, and if I'm gonna look at a chart which can tell us that where the policy is right now in the US. Okay, so there we can see. So the difference between the inflation and the interest rate is just left 1%. Okay, 1% gap is just left over there, and next week we are expecting that if, let's say, the inflation is going to fall up to 5.2%, okay, then somewhere close to 0. 0. Yeah, so somewhere close to these numbers, all right? So 20, yeah, 20. So 20. Okay, so this means that the policy is going to be tight, really tight in the US. Okay, so we may not see another hike in the May meeting, all right? So Fed may not raise another time in the May meeting, all right? So there we can see that the banks which are having high, the tight policy, the numbers, the chart has gone, below 1%, all right? So that means the interest rate is higher than the inflation, all right? Here, inflation is still higher than the interest rate, higher than the Fed fund rates, okay? That chart is telling us. So if we are going to see exactly the drop which is being being forecast for next week, it's going to be a big move. All right, so it's going to be a big move. So we may see drop on the, we may see some strength on yen pairs. Okay, so we're going to focus on the yen pair specifically during the CPI numbers, and also we can see some significant strength in the bond market, right? So we can see bonds can do well specifically during that time, during that time, if we are really going to see these numbers 5.2% or even below that 5.2%, or let's say inflation is going to fall below 5%. That's very, very important data which is going to release next week, so you have to keep eyes on that. Also, there are going to be a PPI numbers, all right, on Thursday, and retail sales. Okay, so Fed is expecting these numbers to drop. They are expecting data to be bad, okay, so that they can stop hiking the interest rate. All right, hope that makes sense. You got the idea. Okay, now let's move on to the setups. So before going to look at that, if I'm going to look at a couple of old charts, okay, so just you can get the idea that what has happened. All right, so Euro-AUD is just going and climbing higher. So Euro is rising against the Australian dollar. Okay, so this is Australian dollar is a risk on currency, and the strength which we are having right now on the euro against the Australian dollar is telling us that we are going to see significant slowdown in coming days. Okay, so Bitcoin is also heading higher. Okay, we're gonna look at that once we're gonna talk about the Bitcoin chart. But the target which we are, the way which we are looking right now. Okay, so if you remember that the wave started from this previous low when price was there at 15,500, somewhere close to those numbers. Okay, and we were expecting it to continue to keep pushing more higher, Bitcoin. Okay, so it's rising, this chart. Okay, so it's rising since then after hitting that low. Okay, and the chart you guys need to remember. Okay, so this is one of the chart. So in the previous cycle, all right, when Fed was raising the interest rate, we had a bigger weekly correction, and here on that date we have seen bottom on Bitcoin, and we have seen shift in the policy from the Fed. Okay, Fed started to cut the interest rate, and we have seen rates started to fall, short-term rates started to fall, and longer-term rates went up. So right now we can see that the yield curve has inverted significantly. Okay, it's at those areas. I mean, just testing in 1980 lows. All right, and since we have seen top on yields, okay, Bitcoin is reversing for upside. Okay, so that's this next leg, similar like this previous one. So the next leg is just appearing over there. So here at the yield curve, we are expecting, you know, short-term interest rate to fall significantly, okay, and that will bring the strength on the risk on assets, okay. Bitcoin is one of them, so we may see, you know, significant strength on the Bitcoin, and this is what you are expecting, all right. And there we can see that when Bitcoin found its floor over there, at the same time we have seen, you know, top on yields, all right. So we have seen top on the yields, and most likely we're gonna see top on the Fed fund rate as well. So very much similar like this previous one, all right, very much similar like this previous one, and drop. Okay, so there we can see, okay, this is what we're expecting, short-term rates to go down, okay, and Bitcoin to continue to keep rising for next leg. This is the target. Okay, the move you are looking is very much similar like this one on Bitcoin up to this previous high, okay. This is going to be the target, and this is where it is heading right now, Bitcoin. So if I'm going to look at the Ethereum, okay, so Ethereum also going to be the similar move. So we were expecting Ethereum to rise from this low. Ethereum is also pushing higher from that low, okay, and Bitcoin also going higher. These are the weekly charts, okay, bigger time frame charts. So just telling you that what's happening, you know, policy wise. Okay, this is the old chart which we have just seen. Okay, this is the direction, and we were expecting rates to fall, rates to peak over there, and there we can see that the Bitcoin is reversing, going higher, and rates are pricing in for, you know, bonds are pricing in for rate cuts, and we are you know having significant drop on 2-year yield, okay, and Fed fund rate is peaking at 5% over there at that top. Okay, so the lower the rates and Fed fund rate goes, okay, the higher the Bitcoin gonna go. Okay, so opposite. That's what's happening right now. So Bitcoin is going opposite to the Fed fund rate and yields, right? And dollar index, we were expecting dollar index to drop from that top. It's dropping. So next week we're gonna look for this to break out and continue, break this previous low and continue to keep pushing more lower. In case if yeah, we let me make it, you know, clear. So this simple flat formation, okay. So this simple flat formation. So breakout, this is the longer term picture, okay? Longer term picture is breakdown and continue to keep pushing more lower, or give us another leg higher. Why we are looking dollar to drop, the reason is very much simple, okay? I have shown you the yield, okay? The yield chart, okay? We are expecting yields to go lower. That will cause Bitcoin, dollar to drop. Dollar is already dropping, okay? Already pricing in for rate cuts, okay? But when dollar will start, you know, reacting to slower growth, we're going to see strength, significant strength on the dollar, okay? So flat formation, okay? We may see another leg higher if inflation is not going to drop next week as being shown on the forecast, okay? If numbers are going to be strong, then strength on the dollar. We may see strength on the dollar. Okay, so euro dollar also went higher back to that top. Next week we're going to look for this next leg lower, okay, back to this previous low or lower than that, somewhere close to this area 104 target. So it's going to take some days to reach over there at that low again. Okay, so update was there. So that wave is just completed. You know, this is the example. This kind of move you are looking on the euro, okay, that kind of wave. Yep. So this to fall and similar formation, ABC move, similar kind of move you are looking. So indicators are common indicators, or as you can get these are moving averages. Okay, moving averages. And price is just repeating similar kind of price action over there on Why we are expecting this kind of move? Okay, the logic is very much simple. Euro is a very much, you know, like a safe haven currency or risk on currency. Okay, and Kiwi is more aggressive than the euro. Okay, or more volatile, we can say that, than the euro, and is a risk on currency and moves quicker than the CAD and euro. So some in some situations it can lead us that what kind of movement we are going to see in the market. Either we are going to see a risk on move or we are going to see risk off move. Okay, so the drop here is leading us that we are going to see similar kind of risk, you know, risk off move on the euro in coming days. That's why we are looking that move. Okay, so no indicator gonna tell you that this is gonna happen. Okay, indicator are not going to tell you that this is gonna happen. So euro to drop too. This is the 10-year yield. Okay, so we have seen 10-year yield significant drop. So why we are expecting drop on yields? Okay, the logic is very much simple. We have seen peak on the inflation. Okay, inflation peaked at 9, and next week it is being expected that it's gonna fall up to 5.5 or 5.2, 5.5 or even lower than 5. Okay, that's the reason money is just simply flowing towards bond market. Okay, people are just buying bonds. Yeah, money is just simply going to the money market funds. That's the reason we have just seen, you know, recently banking crisis. People are just taking their money away from the bank and putting that in the bond market, buying treasuries, buying US treasuries. Okay, that's causing the yields to go down very, very aggressively. All right, and if next week inflation is going further below 5, okay, then yields, there are going to be more pressure on the banks. People, you know, again going to rush towards the money market. Okay, and we may see more downside on the yields. Bond prices can go, you know, higher, yields can go lower. So CAD yen, okay, yen pairs are just simply following the yields. Okay, they are following the yields. There are some other factors as well which are driving the yen pairs. Okay, bond yields is one of them. Bond yields are closer to the yen pairs. Okay, but there are energy prices as well which are, you know, putting impact on the yen pairs as well, right? So higher oil prices can also impacting on the yen pairs, but oil is also peaked, all right? So for longer term, so in longer run, oil also gonna fall. So that's what we were expecting CAD yen to drop. Okay, and next week we may see simple, you know, flat formation, and I'm gonna talk about that, what to expect on lower time frame during the CPI number. Okay, what trade setup you're gonna look for. Okay, so that was a nice trade, by the way, on daily time frame. We're still looking CAD yen to go below that 90. Okay, still a lot of potential left on these pairs for longer term. Okay, these are the updates which we had on the CAD yen. Okay, this is what we were expecting at this low. Breakdown, continue to keep dragging lower or go back up. Arrows are showing go back up. So price right now in this move. Okay, and we may see price to exactly go at 101 before going to get down. But as I said, if inflation is going to fall significantly next week, okay, then we may not see price to test that top. Price can significantly break down and continue to keep dragging lower. This move, this lag all the way up to 90 can appear. Okay, so those who are watching me on TradingView, guys, I'm drawing on my charts, okay, using the pen. Okay, so you may not see my drawing, but those who are watching me on the YouTube, you guys can see my drawing. All right, so yeah, it's pushing higher. So right now it's staying below the moving averages. Okay, so we're going to talk about on lower time frame what to expect on this chart and yen. And you know, Solana still going to be a buy opportunity. Okay, so we're going to talk about that too. So just simply follow the Bitcoin. Okay, we may see this breakout, this daily correction, sharp breakout can happen at any time, and it can follow the Bitcoin very, very aggressively at any time. So we're going to talk about that too. Yeah, so Ethereum, okay, it's just going higher, so pushing higher, so more upside. We're going to talk about that too. So Euro-CAD also going higher. That's a weekly chart. Long way to go, still can push more higher. So recently I posted a video idea on the pound Australian dollar where we were expecting buy opportunity there, okay, and continue to go higher or test this previous low. So that was also a good opportunity, good move we have seen on the pound Australian dollar. All right, so I hope that I have updated that chart. Right, so yeah, so it's pushing higher. So we still can see more upside on this chart. It's just pushing higher, okay, and can continue to keep rising all the way up to this high oil crash. Okay, that's the date where we have seen crash on oil prices. Not crash, okay, it's a spike up. So we have seen aggressive spike on the oil, which caused the inflation to go higher and risk on currencies to do better, specifically the currencies which we the EU currencies like euro and pound, okay, and other EU currencies, they did really bad during the Ukraine war, when the Ukraine war started, and we have seen spike on the oil, right? And we have seen recovery on oil prices, okay, and recovery on these currencies as well. So EU currencies, euro or pound or other European currencies are recovering really well because of the oil. Okay, so we still can see more upside. So we're going to talk about that chart too. Okay, AMD is also pushing higher and can continue to keep pushing more higher. Okay, all the way up to. We're going to talk about the gold. Okay, all the way up to these areas. We're going to talk about these stocks as well. So they AMD and Nvidia, they are doing really well. Okay, so oil still dropping. All right, so continue to keep pushing more higher, more lower, and in the last couple of weeks we have tagged 60. Yeah, when I posted that chart, people were not expecting this move gonna happen. It's a long time ago. Yeah, almost 8-9 months ago, right? People were not expecting that this is gonna happen, but now it's happening, right? And I'm expecting oil gonna go lower, okay, than 60, than 50. Then you're gonna have, really, then Fed gonna have control on the oil. So pound, okay, we were expecting pound to go higher from that low. Nice move we have seen from this previous low. Nice decent wave. All right, and the next move we may see drop next week. Okay, so we are expecting another leg lower from this top. We're going to talk about that on lower time frame, what to expect on the pound dollar to do. So US 2-year yield was really, sharp. Yeah, that was, this is, these charts are just following the oil. The yields are just following the oil, okay? They are following the oil. I haven't posted that chart with the oil, but this is what you need to keep really eyes really closely. Okay, so this is the PPI for unprocessed goods for intermediate demand, 12-month percentage. That has fallen below zero. Okay, that has fallen below zero. This means that inflation is we are going to see, significant drop on inflation in coming days. Inflation is going to crash really bad. Okay, right now 5.6%. okay, but PPI is telling us that we are going to see, drop on inflation, and yields also going to follow to that. Yields are already following that. Okay, so if I'm gonna look at this chart and the updated chart is here. Okay, on this chart we can see that this triangle was setting up for a breakdown. Okay, and we have already seen that triangle there on PPI. Yeah, a PPI triangle broken down. All right, and US 10-year yield was also forming similar triangle. Okay, and if I'm going to look at the updated chart, this is the updated chart. Okay, there you see that the triangle broken down. I mean, the lag went lower. Similar triangle we have seen on the PPI. Okay, the next leg is just appearing over there. And if we're gonna look at that chart again, the 10-year yield. Okay, there you can see that the triangle is here. Okay, and we have seen a tremendous move over there. People were not expecting that when I was, calling that drop on the yield. Okay, so guess what? We have seen that triangle way before that on oil. All right, this triangles, that ABC move. This is the oil chart. It just shown you. This is the triangle. So there you can see this triangle, the daily triangle, way before formed. That triangle formed on the date is not there. So way before, okay. So on 6th of June, there we can see 6th of June. And that triangle just went lower very, very aggressively. So it's simple, guys. There is no, science behind that. Okay, if oil goes higher, you see that the inflation goes higher. Okay, if inflation goes higher, you see that the yields goes higher. All right. So higher oil prices are inflationary, and lower oil prices are disinflationary. So simple. There is no science behind that. If oil goes higher, you see that the inflation goes higher. Okay, when inflation goes higher, then you see that the yields goes higher. Yeah, when yield goes higher, then Fed goes after the yields. There is the interest rates. Okay. Now similarly, we can see that the oil prices are going down. Okay. So we are expecting inflation to fall. So inflation is falling. You are just simply expecting yields to fall. That's the reason you are having similar pattern on these two charts. You have seen similar pattern on the oil, and you have seen the similar pattern on the yields. Okay, that's the reason both time it worked. Okay, so the oil went lower, and the yields are also going down too. All right, just need to understand the sequence, the lag which is there in the policy. Okay, so there's a lag, and that lag is just playing out the policy lag. All right, so a couple of more charts are there, and 2-year yields. Okay, Euro New Zealand dollar is just going higher, so nice move is just happening over there. And this chart is just still holding the top. All right, and this area we may see another leg lower on this chart. Okay, if you're trading, all right. If you're not trading on this chart, just ignore. This is not a major pair to trade. Okay, dollar yen gonna be important. Okay, dollar yen is also breaking down. We got a breakout, and next week, we still may see another leg higher. Okay, very much similar like the oil chart. So I will show you the oil chart. Okay, we may see another leg here at within this area. All right, and then again a big move which can drag all the way up to 120. Yeah, and as I said, if inflation is going to drop significantly below 5% or even 5.2, okay, we may see breakdown. Price may not visit that top, and it can break down and can continue to keep dragging lower all the way up to 120. So we're going to talk about that. All right, so we're going to talk about that too on lower time frame. So these are the coins. Okay, now let's move on. Let's look at the charts one by one. So first of all, I'm going to look at the dollar index. Okay, so on dollar index, what we are expecting, we are simply expecting the dollar to drop. Okay, dollar is just simply dropping. Let me find a chart over there if I do have that on either on daily or maybe on 2-week chart. So yes, that's what we're expecting when dollar peaked. Okay, dollar is going down, and this might be a longer term drop on dollar. All right. So what can cause that dollar to continue to keep dragging lower all the way up to these previous lows? All right. So the answer is very much simple. Okay, Fed has raised the interest rates significantly to bring down the inflation. Okay, and growth hasn't impacted yet. Okay, growth is still strong. So once growth gonna start to fall, all right. So slower growth. All right, and later on, we are not there yet. Later on, it's a longer term chart. Okay, It's a longer term, picture. When Fed will start to go after the growth, okay, they can start cutting the interest rate, may again start another QE program, okay, to spur the growth, okay, that can cause the dollar to drop that much low, right? So we are not there yet. We still have to see, slower growth impact in the market, which can, again give some strength to the dollar. Dollar still can get stronger. And once Fed will start cutting the rates aggressively, okay, market already pricing in for rate cuts, then we can see, a longer term drop on the dollar. So that's a bigger picture, 2-week picture, okay? So we are having reversal on dollar, and dollar is dropping from that high, all right? And all these charts were pointing it out to go lower. Okay, so if I'm gonna look at the updated chart, so updated chart is gonna be the flat formation. I think I haven't updated this chart yet. All right, yeah, I haven't. So the flat formation. Okay, so it's very much simple. We still may see another leg higher. Okay, so if I'm gonna go to the, yes, okay, so if we see inflation, if you are buying gold, okay, gold is not a buy opportunity right now. People are talking about that, buy gold, buy silver. This is not the time to buy the gold and silver. All right, so they already made their move because of the inflation. All right, both are inflationary item. Gold is inflation, when markets start to, when market prepares for the inflationary move, okay, gold start to rise, silver start to rise. Okay, so should gold start to rise now? Okay, it's not making any sense gold to start further, gold to go higher, at from current price. Okay, why? Liquidity, Fed is raising the interest rate. Okay, so liquidity is drying up, right? We have seen banking crisis. Why we have seen banking crisis? Because banks were not having enough cash. All right, people were just withdrawing out, withdrawing cash from their accounts and putting those cash into the money market. All right, buying treasuries, U.S. treasuries. Okay, that causing the liquidity, crunch, or liquidity was drying up. Liquidity is drying up. That was causing the banking crisis. What Fed did, they opened the discount window. People started to buy. Banks started to buy a lot of money from the Fed. They started to take loan from the Fed. Okay, that's caused the banking crisis to slow down. We are still having banking crisis. Okay, banking crisis hasn't gone anywhere because they are struggling to generate the struggling to generate the cash. All right, and cash is going to the money market. So that's causing the credit crunch, and liquidity is drying up. All right, so what going to happen? All right, people are going to sell their assets to generate the cash. Okay, if they have gold, they're going to sell the gold. If they have silver, they're going to sell the silver. Okay, to run their businesses. Okay, so we're going to have liquidity or credit crunch that can drive these assets lower. Gold can go down, silver can go down. So if you're looking to buy gold or silver, because of that, because of the thinking that we can have crisis, okay, risk on assets going to drop and people are going to run after the gold. This is not going to happen. Okay, we are not there yet. We have already seen that inflationary move in the gold. Okay, gold have already gone. So I will show you the gold chart when the time. Let me show. People are just not sure why you are rushing after the gold. We are even not paying attention on the gold. Okay, gold is not a buy. So gold was a buy then. Okay, when it was there, when it was close to 1160, that was a buy. That's when it was setting up for the inflationary trade. Okay, so QE. Fed was having QE, some tightening cycle started over there. They cut the interest rate, and then again we have seen pandemic in 2020. Okay, and after having pandemic in 2020, we have seen inflationary move. Inflation came. and gold went higher. Okay, so if you are looking gold to go more higher at the current price, it's not making sense. We are going to see disinflation, you know, and that going to have, you know, low liquidity, which going to drive, you know, I'm showing you, you know, weaker dollar, okay, but weaker gold as well, not making sense right now. Okay, drop on both, but the drop going to be because of the low liquidity environment, right? So low liquidity going to cause the gold lower too, okay, and for some time you're going to see drop on the dollar, and once dollar going to start to react to the slower growth, then we're going to see strength on the dollar. All right, the yeah, we will talk about that, guys, when I'm gonna, you know, look at the you know, I mean, lots of, you know, people are expecting that we're going to have similar kind of movement in the market like we have seen in 2008 or 2009. Okay, so I don't think so we're going to see, you know, similar degree, you know, a drop on stock market or on equities, and similar kind of strength on dollar is not going to get that much gain, the gain which we have seen in 2008 or 2009 because of the you know, banking crisis. Okay, so let's talk about that, you know, setup first, all right? So that you can get some opportunities next week. Okay, so what you are looking, simply this move, okay? There is no sell opportunity on the dollar. You are not looking sell. So the sell opportunity was there. I have just shown you. Okay, so the sell opportunity was there, and there. The chart which I've just shown you. So that opportunity is just gone now. So what you are looking, simply, you are looking simply if inflation is not going to drop next week and still going to stay higher, then you are looking this next move. Okay, bullish wave, very much similar. Like if I'm gonna open my oil chart and gonna show you from there, then you're gonna search that wave, that kind of move over there. All right, so I'm gonna remove the hand, this hand, and I'm gonna go to the daily chart. All right, then you're gonna search that kind of move over there. Okay, this kind of move on dollar index. All right, so if inflation is not going to drop, then you are simply looking buy the dollar. If inflation is going to drop, then break down and continue the trend. Okay, then you're not gonna have a good opportunity over there on the DXY. Then you're gonna buy the yen pairs. Okay, I'm gonna talk about that, which yen pair you need to focus that during the CPI numbers. Okay, that's the dollar index chart. Okay, so, and chief, you're gonna look for chief to bounce off. Okay, if inflation is not going to fall, then just bang, move into that direction. Okay, not expecting a big move over there on the dollar against the chief. Okay, just go there at this area, 94.50, and you're looking for a bounce off during the CPI numbers next week and continue to go back up on the dollar. All right, so you're expecting CPI numbers to be bad. Bad means higher numbers, all right? It's CPI not to fall and bounce off and go higher. If CPI is going to drop, as I said, then you may ignore the dollar chief chart, all right? So you can you know, then consider opportunities on other charts, okay? But this is what I'm looking for. Even if whatever happens, okay, if inflation is going to drop or not, then you are just simply looking rebound on the dollar chief. Okay, so euro dollar to go down up to this previous low within these areas of 104. So this may take some time. So we don't have that big wave, you know, within a 1 day or 2 day or even 1 week or even next week. Okay, so you're gonna have, you know, some sideways market on it. Okay, as shown you the New Zealand dollar chart against the CAD. Okay, so if I'm gonna go out and I'm gonna look at that, and the move can take somewhere close to 40 days, all right? So it's a 41 days. 41 days can take that daily wave, which I'm showing on the euro or drop. So So if you're looking for short-term opportunities, okay, then simply paying attention every time when price is coming close to this previous high. All right, this previous high at 1010, okay, or at this current previous high 1098, okay, then you are looking these short-term opportunities. Okay, these short-term opportunities and these short-term opportunities to go all the way to this previous low. Okay, so right now what I'm anticipating a flag formation to form over there, a flag. Okay, let's just pull out the CAD chart again. Okay, you're expecting this kind of flat formation to flat or flag, whatever. Okay, and price to it's already developing over there. Okay, like that. And once you're gonna see that there are gonna be a loss of momentum on your indicator. Okay, there you can see that the momentum was losing over there. Okay, when you're going to see that the momentum going to lose over there here on your MACD, then you're expecting a sharp move like that. Okay, this is the trade you are waiting to catch on the euro dollar. That's the move. Okay, a quick move. Right now, a flat formation like that, which is just appearing over there. Okay, very much similar like this. And this next trade, and that next trade to break this previous low. Okay, this previous low, this move you're expecting, or possible lower than this low. Okay, this short-term move, and once price gonna finish this leg here, you are expecting it to pull back again. Okay, that might test that top again, 19 again, like this move. Okay, this move which is just hitting over there, and once price gonna test that previous high, you are simply looking a sharp sell-off. Okay, this sharp sell-off which gonna go all the way up to this previous low. So this is the exemplary example you can have on your right side on the Kiwi CAD. Okay, and the leg is gonna be the daily. Okay, and on lower time frame, if I make it simple, okay, then you are simply looking these kind of moves first, short-term trades from this previous top, and once price fall very aggressively, then continue to keep dragging lower all the way up to the 105 or 104 areas. Okay, yeah, makes sense. So looking to counter it, the trend is bullish, and the previous move was pretty nice on it. That move has just almost tagged that previous top. So we are not expecting it to rise all the way up to 114. All right, the 114 is far away. We're expecting it to just simply drag and go a sideways market, a longer term sideways market on the euro dollar. Hope that makes sense. Okay, and simple analysis on the pound dollar too. Yeah, seen that chart just now at the start. It went higher, okay, then go down from that previous top. So we still may see a short-term the move, okay, the trade, the wave you are looking is this. All right, that's the trade you are looking, go down. Yeah, this is gonna be the trade you're looking. So if I'm gonna look at the lower time frame, all right, so we are having that flag, okay, may see another leg lower. I'm not anticipating that. What I'm anticipating that the price has already found its top, okay, and slowly is pushing lower, and price to just simply they hit that this previous low 123, okay, and after 123 another double top, okay, double top very much similar like the euro dollar, and then drag lower. All right, so you are simply looking this to drag. Okay, if I'm gonna open another chart on my right side, okay, and gonna look at the pound chief chart. All right, so on this pound chief chart, we already have seen that top over there on the pound chief. Okay, so we have already seen. So let me try to find a chart quickly to just let you know that what I'm talking about. Okay, so I'm quickly gonna try to find that chart. There you got it. There you go. Got it. Okay, so there you can see, okay, pound against the chief, pound against the dollar. Okay, we have seen a sell-off on pound against the chief. Okay, so franc went higher. We have seen strength on the chief, but we haven't seen strength on the dollar. Why we have seen strength on the chief, but why we haven't seen strength on the dollar? Both currencies are safe haven. Dollar is a safe haven. Chief is a safe haven currency. Okay, so chief significantly went higher. All right, but we haven't seen strength on the dollar. Okay, we have seen drop on the pound against the dollar, against the chief. Pound went lower. Okay, that was a sign. That was a sign that the pound is going to drop. Okay, that was a sign that the trade is going to happen here. That's simply that was a lead. Okay, the drop on the pound against the chief was a lead, and that lead was telling us that the pound is also going to drop against the dollar. So you should sell. You should start selling the pound against the dollar. So that was the trade. Okay, so it's happening again. All right. So it's this setup is forming. The setup is simply forming again on the pound dollar. All right. I'm gonna go back, but the move is not sharp on the pound against the chief. Okay, so let's just make this chart more clear. So okay, so there you can see that the chief is, if I'm gonna look at the 4-hour time frame. Okay, so the drop is already happened over there. All right, the price stopped dropping from this previous top. So let me just pull out some dates on it. All right, so it's coming close to this date, March 23, 9, right? So Thursday 9, March 23. And the lower this goes, okay, you are looking pound dollar to sell to. This is also a sell opportunity, pound chief, okay, but it slightly has gone lower. It's not, in case if it has that top 114, okay, so still going to be a sell opportunity on the pound chief. But you are trying to get a lead from this pound chief chart to sell the pound dollar. Okay, that's the setup you are looking for. That's the opportunity you are looking for. You're looking pound chief to continue to keep dragging lower, and as long as pound chief keep falling, all right, you are looking pound dollar to drop to. Okay, this is the chart. Okay, you got a lead. Okay, you got a setup here. Okay, this way you can increase your confidence on your setup. Okay, and you can risk accordingly. All right, so on lower time frame, in case if another leg higher comes over there, still looking for the opportunity to continue to keep dragging lower. Hope that makes sense, guys. And once price start falling very aggressively, you may add more. Okay, you may add more all the way up to this previous low. Dollar CAD. Okay, look at the weekly chart and to get the idea that where it is heading. 2-week chart. All right, we are heading back to that previous high. All right, previous March high. Okay, we still got a more room to left on this chart. Okay, so this opportunity still there. All right, so looking this to continue. So if I'm gonna look at the lower time frame, and on daily time frame, we have seen some decent waves on it. Okay, we are heading into that direction. So going higher. Okay, so there we can see. So what you are looking, simply you are looking another daily wave to the upside. Okay, and that daily wave to continue to keep pushing more higher all the way back to that previous high. Okay, 147, 146. That's a longer term move. Okay, that's a longer term move. But weekly, but daily trade gonna be that. Okay, this wave, green bar, green box is already showing. So again, CPI number is gonna be important. If CPI numbers are, inflation still showing higher numbers, okay, then break down another leg lower, test this previous low, then start looking for a buy opportunity. Again at 132.80, all right, so 133 within these previous lows, you're looking again a buy opportunity. Okay, if inflation is going to drop significantly, then simply whatever, okay, whatever gonna happen on the inflation, pound dollar, a dollar CAD gonna remain a bullish opportunity. Okay, it may not test that low and continue to keep pushing more higher. Okay, then you need to really watch the lower time frame, 15-minute time frame, or 1 minute, 1 hour time frame, chart to look for buy opportunity. All right, so as I said in the previous weekly outlook, that the dollar CAD gonna remain bullish, whatever gonna happen fundamentally. All right, CAD gonna lose more quickly than the dollar. Okay, and you're gonna stay bullish. We are going to see this inflation, this chart gonna stay trending for upside. Okay, and every time when you see that the dollar CAD drop, every time you're simply looking for a buy opportunity. All right, so guys, just let me know that everything is all right on the YouTube. Seems did not get any. Let me know, guys, if do you hear me on YouTube? Thanks. It's fine. All right. Thank you. It was just stuck on my end, and hopefully it's all right. Thank you. Okay, so dollar CAD gonna be a buy opportunity, whatever happens. So Australian dollar, US dollar. So if I'm gonna go to the clean chart, okay, so that you guys can get the idea that what can happen on the Australian dollar. Australian dollar is a bit of tricky chart right now. Okay, and you shouldn't blindly trade on this chart for upside. Okay, there we can see the Australian dollar chart is just simply forming a weekly flag. Okay, this weekly flag. Okay, and we may see breakdown, and it can continue to keep dragging lower all the way back to this previous low, 60 or even lower than that 60. Okay, this March 2020 low, we can see next leg lower. All right, so Australian dollar is a risk on currency. Okay, if Australian dollar keeps falling, means that nothing is good in the market. Okay, risk and assets are going to fall. Okay, so we may see this breakdown. Okay, like that, and Australian dollar can continue to keep dragging lower. This is not my this is not my base case. Okay, but this is possible. This is not my base case. My base case is still strength. Okay, Australian dollar to go and test that previous top before going to drop. All right, but when you are looking to buy the Australian dollar, make sure you understand that we can see breakout. Okay, things can get worse. All right, banking crisis can get more worse, and if that happens, then you're gonna see breakdown of that daily flag. Okay, then that daily flag gonna break down aggressively, and price gonna continue to keep dragging more lower. All right, so right now, what I have shown you, sell-off opportunities on the euro dollar, sell-off opportunities on the pound. All right, and looking to buy on the Australian dollar, looking to buy on the New Zealand dollar. These two charts are opposite. Okay, and looking to buy on the dollar CAD. Okay, dollar to go higher against the CAD. All right, so it's because of the crisis. Okay, if crises are going to get worse, we Fed and governments are still talking. US treasuries are talking that the banking crisis are over. All right, no, they are not over yet. As long as the Fed fund rate is is extremely high, okay, 5%, or if they are going to raise the interest rate next week, 5.25, 5, another 25, another 25 basis point hike. Yeah, the flow which we are having from banks to money market, that can accelerate it. Okay, depositors, they can withdraw their money, they can put that money in the money market. Okay, then crisis can get more worse. So the trade we are expecting on the Australian dollar gonna be that. Okay, so you are looking this opportunity. Okay, so buy opportunity from there, and this to go there. Okay, test that top. If inflation going to drop, then we may see drop on the dollar. All right, dollar can drop. Okay, then this opportunity gonna work. Okay, we may see all the way back to that high. So make sure you understand that the correction which I have just shown you in the clean chart, that can break down too. So same on the I mean, if I'm gonna put 2 arrows on it, okay, you can see these 2 directions. Okay, it's a a neutral analysis, we can say that. Okay, or the opportunity going to be based on the price action during the data which we're gonna get during the next week. Okay, so same gonna be over here. My base case is the bullish on the New Zealand dollar to go higher. All right, this top. Why the base case is the bullish on these 2 charts. Okay, so dollar can gain, dollar gained already. Okay, so but dollar hasn't gained against the Australian dollar. Dollar dropped, sorry. Okay, but dollar hasn't dropped. There we can see. Dollar hasn't dropped yet against the Australian dollar. Okay, or we can say that the Australian dollar, is a risk on currency. New Zealand dollar is a risk on currency. They lost their strength more significantly because of these banking crisis, and not gaining yet. Yeah, so we still may see strength. You see that there we call that lag. Okay, there is a lag on between these 2 currencies. The pound is also a risk on currency. Australian dollar is also a risk on currency. Pound gained, all right, but Australian dollar hasn't gained yet. So we still may see that move. So what you are actually trying to do, okay, you are looking sell opportunity on the pound. All right, you are looking sell opportunity on the pound and buy opportunity on the Australian dollar. All right, so this gap gonna shrink. All right, so that gap gonna shrink. You can draw a trend line anywhere. All right, so there is no fixed rule for the trend line where you should draw a trend line, where you shouldn't draw a trend line. All right, so the similar opportunity you're looking on the New Zealand dollar. Okay, so short-term opportunity to go there. Okay, and if keeps pushing more higher, continue. If not, then the drop can happen. Okay, like I've shown you on the Australian dollar. Hope you understand that, guys. So we're gonna have the dollar yen first. All right, so dollar yen was a very tricky pair. Okay, no doubt. So that was the inflationary trade, okay, which was building over there since very, very long. All right, so dollar yen remained within these ranges since very long, and since 2017 to 2021 remained within that bigger weekly flag, and then finally that inflationary trade came over there, and bang, dollar went higher very, very aggressively against the yen. So we were not expecting that much strength on the dollar against the yen, but what happened over there? We have seen a significant policy divergence between these 2 banks, Bank of Japan and the Fed. What was happening? All right, Fed was raising the interest rate, all right, trying to contain the inflation. But on the other side, Bank of Japan was printing the money, all right, buying bond, trying to contain the yield. All right, yield curve control was in place. All right, buying bond, with tremendous money, creating more money, trying to create the inflation. All right, Bank of Japan was trying to create the inflation. On the other side, Fed was trying to contain the inflation, trying to bring down the inflation. So that gap was getting wider. That was causing the dollar to rise against the yen so aggressively and went up to 150. All right. So once we have seen the peak on inflation, once yield, once we have seen peak in the inflation, and we have seen peak on the yields, dollar yen started to fall, or simply we have seen peak on the oil, and the dollar yen went lower. So I'm gonna look at the inflation chart here. All right, so inflation chart. That's the inflation chart. That's the interest rate, sorry. So that's the inflation. That should be here. The inflation chart should be here. All right, and dollar yen chart should be here. And we should have candles. And let's go to the monthly and go to the line chart. Right, so if I'm gonna go to the monthly on both charts, let's go to the line chart as well. Okay, let's remove those. I'm gonna draw that again. Okay, so we have seen that simply, a huge long correction over there, okay, and a sideways, all right. So inflation wasn't rising in the US here. Let's just make it a bit thick over there. Okay, so what happened? Inflation came after hitting the zero. We have seen inflationary trend. Okay, bang, we have seen dollar went higher against the yen, bang. Okay, we have seen top on inflation. Inflation started to drop, and we have seen drop on the dollar against the yen. Okay, so it's simply a gap between the US 10-year yield and JGB 10-year yield. Okay, that gap is shrinking now. Okay, which is causing the dollar yen to drop. Okay, so what we are expecting inflation to do in coming days, okay, just continue to keep falling. Where the Fed target is 2%. Okay, so if inflation keep falling all the way up to 2%, that's what Fed is looking for. Okay, so dollar yen to just keep falling all the way up to this previous low, or 110. All right, so there's no science, or there's no complex things behind this. Okay, you're simply looking inflation to continue to keep falling, and interest rate and yields to keep falling, and dollar yen to just keep falling. Okay, no science behind that. Okay, so that's a longer term picture. So that's the reason breakout is working over there. So what you are looking for next week, okay, we still may see another leg higher. First of all, hopefully you understand the inflation picture. Okay, so let's just talk about that. If inflation is going to fall, then what you should do next week. Okay, what they're expecting inflation. Okay, right now the inflation is 6%. 6% forecast is the 5.2%. Okay, let's say if it is going to fall below 5%. All right, simply looking for a breakout on the dollar yen and sell opportunity. That's it. Okay, so if I'm gonna go to the dollar yen current chart, current price, all right, there is a flag which is just appearing over there. Okay, so breakout, sell opportunity, stop looking for this trade. Slightly can get bigger before Wednesday. All right, inflation data gonna come on Wednesday. Yeah, so Wednesday, and we are having 2 days. So Monday gonna be off. Monday gonna be holiday, and Tuesday gonna be trading hours. and Wednesday we're going to have inflation data. Okay, so simple. Inflation fall below 5% or even 5.2%. You're looking for a breakout. Slightly can get a bigger. Okay, so this is what I'm saying. Slightly can get a bigger. Can go up to this top before going to breakout. If it goes, no problem. You're looking for a breakout. You're looking for inflation to drop. You're looking for a breakout, sell, stop, and this trade. Okay, and if the drop is going to be really sharp, really quick, sell-off is going to be very, very sharp. Okay, then dollar yen to break this previous low and continue to keep falling all the way up to 125 first. Okay, 125, and then longer term target going to be 120. Okay, so 120. So let's look at the previous numbers on inflation. Okay, so if I'm gonna look at the recent one, let's look at the 10th of November. Okay, 10th of November, we have seen the previous one was 8.2%, forecast was 7.9%, and the number came at 7.7%. Okay, what happened on 10th of November 2022? Okay, let's just find that 10th of November. This is the 10th of November. Okay, 10th of November, we have seen bang on a strong aggressive move. Okay, we have seen that strong sell-off over there. This wave came over there after that 10th November inflation numbers. Okay, so what we were expecting at that day, we were expecting, let me find out that chart gonna be on there, maybe on weekly, 2 days, daily, that chart daily. All right, so this is what we're expecting for short term. Okay, and that after that short term, this is the short term move was there. Okay, bang on, it's just crashed. All right, so after that, price was just keep falling on the dollar yen. And now let's look at the next. All right, so 13th of December. Okay, 13th of December. What happened on 13th of December? Let's just try to find out that 13th of December. All right, this is the 13th of December move. All right, so we have seen 13th of December. This is the move we have seen on 13th of December. All right, so the move was from 38 to 34. All right, a decent move was there, and that's where we have seen the yield curve control. The band has raised from Bank of Japan. Bank of Japan has raised their band from 25 to 50, and we have seen a significant drop over there. Okay, so hope that makes sense. All right, and then the next numbers came on 14th of March. Let's see what happened on the lower the inflation goes. Okay, so the volatility is just dropping over there. So 14th of March, the recent one. So we haven't seen a significant drop on inflation on 14th of March. Okay, so 6.4 to just 4. All right, 6 was the forecast, and we have seen 6. We haven't seen a significant movement on 14th. Let's just find out what happened on 14th of March. All right, so there is the 14th of March. Okay, we even have seen that sell-off, right? But not the way we have seen previously. Okay, we have seen drop over there, but this move was driven by a banking crisis actually. Okay, we have seen drop, but the main reason was the banking crisis. Okay, some banks were blown out in the US, and the big bank, Credit Suisse, has blown out in Switzerland. So hope that makes sense. Make it a strong case what you are looking during these CPI numbers on dollar yen. Okay, they are expecting a huge drop. Okay, they are expecting a huge drop in numbers. If that drop comes, or let's say if it goes below 5%. Okay, so drop below 5%, gonna be a surprise for the market. Yeah. And what you're gonna look for, just simply a breakout opportunity. Okay, if I'm gonna copy this move and gonna put it there, that's what you're gonna look for simply. And if I'm gonna pull out my short position, okay, looking for breakout and then continue. Okay, so as I said, we're gonna have a couple of days before that numbers to come out, and that can slightly push more higher. All right, so we may see a couple of more days. Okay, correction can slightly get bigger, right? But not beyond that top. Okay, and then you're looking for breakout, not from current price. Okay, then you're looking for a breakout from close to that top. Okay, so breakout there, stop behind, and look at this to continue. Okay, so your target gonna be this is I mean, don't just trade that when market gonna open. Okay, this is not a setup when market gonna open, right? This is not a setup when market gonna open. The setup gonna form before, ahead of the CPI numbers. Okay, and once that breakout comes, then you're looking it to go all the way up to 125, or in best case scenario 120. All right, this opportunity gonna form later on. Okay, this is what I'm talking about. Okay, breakout, sell the breakout. Broken. Okay, broken. You gotta stop. You gotta entry, and you gotta move. All right, so this is what you're gonna look for, breakout. All right, so this setup gonna be based on CPI numbers. Drop below 5% or close to 5%, breakout, bang, continue. If we don't see that, you know, drop in the inflation in the CPI number, CPI is not going to drop. Okay, then no need to panic. Then just simply continue to keep pushing. I mean, if CPI numbers is going to be higher, okay, then price to just continue to keep pushing more higher all the way back to that previous top. Right, this is, by the way, my base case. I'm expecting that the price still can visit that 138. That 138 possibility still exists over there. Okay, and if it goes there, then you are looking it to sell opportunity over there from that previous top. Okay, whatever happened, guys, whatever happens, all right, there gonna be opportunity on this dollar yen, this dollar yen chart for longer term. Okay, we are not simply interested into this move. Okay, we are not interested in the buy opportunity on the dollar yen. Dollar yen can go, it can continue to keep rising up to 138, but we are not interested. We are more interested dollar yen to go up to 120. All right, or in longer term 110, 107. Okay, why 110, 107? The logic is very much clear over there. All right, inflation topped. Yields are pricing in for lower inflation. Fed is looking for inflation to go to 2%. All right. When inflation gonna go to 2%, the gap which we are having between the Bank of Japan and Fed, that gap, the policy gap gonna shrink. All right. And that gonna cause Fed to cut the interest rate from 5% to bring it down to 2%. All right. And the dollar yen gonna keep falling towards 107, okay, 110 for longer term. So our longer term picture not gonna change. Okay, we're gonna keep selling the dollar yen whenever we're gonna see a possible opportunity over there on the dollar yen. All right, this picture, all right, not just on the dollar yen. All right, this policy divergence is not just on the dollar yen. It's on all yen pairs. Okay, all yen pairs are having that policy divergence. All right, and this policy divergence gonna shrink that gap at some point. This gap not gonna stay over there forever. All right, Fed is being expected that Fed gonna hold the interest rate at next meeting. Once they're gonna hold, and what they're gonna do after that? All right, the cycle is over. The hiking cycle is over. They're only gonna cut. And what we can expect from Bank of Japan, they may change their policy. Okay, big may. They may change their policy. All right, highly likely they're not going to raise the interest rate because inflation is not going to sustain in the Japan. All right, so they may not, raise the interest rate, but they can tweak. All right, they can tweak again. They can, tweak the yield curve. They can, either they can completely abandon the yield curve control, or they can, raise that band to 1%. Okay, inflation is still close to 3% or above 3% in the Japan, so they may tweak the yield curve to 75 or 1% on 28 May. All right, on the upcoming meeting. So also crude oil is gone. So a lot of good lot of good, we can say that, good news coming over there in next couple of months for yen. All right. So rest of the world is looking to pause the interest rate. Okay. While Bank of Japan is looking to change their policy. All right. So when they're going to change, who's going to be the winner when rest of the world going to be on hold on interest rate? Bank of Japan, obviously. All right. So Bank of Japan is going to play a long game. So they're going to be the winner at the end. So that's not going to change the bigger picture on the dollar yen. All right. So you're looking at to just continue to keep. So that's why we are not interested to go along on the dollar yen. We are more interested to see this trend, the trend which just emerged over there from 152 to continue to keep dragging lower. It's a longer, a big chart. All right. Dollar yen is a big chart. Hopefully you understand that what to do. So the trade gonna be, again, the trade you are looking gonna be, I'm gonna put 2 arrows over there, breakout. All right. And this. Okay. So you may see some price action over there, right? This, some price action. So this is the trade you are looking. These 2 arrows are showing. All right. So if that wave doesn't happen, then this is the wave you are looking. All right. This is the trade you are planning for. It's obviously you're not gonna see that wave in 1 day or 2 day or even a week. All right. This is the 2 or 3 month move I'm showing. All right. This is a 2 or 3 month wave which I'm showing over there. Yeah. So if that if it has already started from there, then this is a continuation trade from there. All right, all the way up to there, continuation trade. All right, so if we still gonna get another leg higher, okay, this is possible. Then this is the move you wanna. Let me just simply bring a chart over there again. All right, so the move we wanna catch over there gonna be that. Okay, so this is the move you want to catch. The green box is clearly showing over there. So what move you are having right now? This move, the move which we have seen already on oil. Okay, what we were expecting. All right, this is a perfect chart to understand, right? It's a perfect chart to understand that possibility. Okay, we were expecting oil to give us a similar move, like which, we are looking right now on the dollar yen, similar move up to 60. Okay, but what happened? What happened on oil? Oil went lower, okay, but didn't continue the move, okay, and went higher for another leg. ABC move happened over there. Okay, now let's look at the next chart, on the next oil chart. Okay, this is where we are right now on dollar yen. This is where we are right now. Okay, what happened? It broke out, but slightly went higher and then broke out. All right, so went higher, passed that top, and then the move came, then the wave came over there. All right, then the wave came over there. Right, there you can see over there, then the wave came over there. Okay, after testing that top. So hopefully you got it, my point. The move you want to catch is this. Okay, this is the wave we want to catch. Okay, that's the wave. That's the wave. All right, so we may still see another leg higher like that. Okay, this is where my green box is just showing over there. This may not be a start for the dollar yen to continue to keep dragging lower all the way. But as I said, the first possibility which I have just shown you, the important going to be the inflation. Okay, inflation dropping below 5%. Breakout is coming. You're looking to sell the breakout. and looking to get behind that breakout, and looking just to continue to keep dragging lower. If that works, perfect. Continue to keep dragging lower. If it doesn't work, numbers are not going to be the good. Another leg is going to happen. All right, no worry. If you want to trade, you can buy. Let the price go up to 138 and set up again from there 138 to okay. So target is already clearly defined over there. If you don't understand that, what's going to be the target or what going to be the risk, okay? What kind of risk you're going to look for? The target is clearly defined, okay? You're looking for a previous move extension, simply this previous move extension, okay? This is the previous move which we are having. Why I'm comparing oil chart with the dollar yen chart? Why is that? What's the logic behind that? Simply oil inflationary, dollar yen was following the yields, okay? Now oil going down, all right, and dollar is just simply following the oil. Oil is going after the dollar yen is going after the oil, okay? Now yields are just coming after the oil, or we can say that the dollar yen chart, okay? So this is the previous wave. That was the previous wave. So if I'm going to pull out my fib lines from there to there, from there to there, okay, and target is clearly defined over there. So oil went up to 27, okay? So 27 of this previous impulse, okay? So you're looking the target to first 27, which is 124 or 125. Yeah, the risk accordingly. Move is already shown on the oil chart, okay? Hopefully you understand, guys. This chart is not going to change anytime soon. It's going to stay like the way I'm showing for next couple of months. All right, just need to understand how to trade these two charts. All right, so euro yen chart also gonna change anytime soon. So this is a more sideways chart, okay? I mean, sideways means more, giving you more opportunities. The euro yen is giving you more opportunities to trade rather than, whereas we have seen, we were expecting a trending move on the euro yen and continue to keep falling all the way, but it went into a sideways market, okay? So this move still gonna come all the way up to this previous low. All right, we're gonna have that wave. There is no, you know, let me just tell you why we are sticking to that. So if I'm gonna remove that, I'm gonna pull out Euro-AUD chart. Okay, what caused that euro to drop against the Australian dollar? All right, the simple is the oil. Oil caused the oil brought the inflation, right? On 2nd of February, all right? Oil brought the inflation. Now we can see that the euro has removed all of its losses against the Australian dollar, risk on currency, okay, dropped. If I'm gonna invert that, all right, so I can compare that euro yen chart or Aussie yen chart with this chart. So let me just pull out that. All right, so and there, if I'm gonna pull out, this is the place. All right, this is the place where we have seen the oil crash. Okay, the yen went lower. Yen is also, Japan is also rely on external energy sources. All right, similar like the Europe. All right, so went higher. Okay, now this has to follow up this chart. Right, this chart. So it's a bit of longer term picture, but the trade setup is very much clear. You're sticking to the drop the way we were sticking to the buy on the Euro-AUD. Okay, I'm gonna when I'm gonna look at the Euro-AUD, I'm gonna show you some charts. Okay, we were expecting the Euro-AUD to form a double bottom over there and reverse for a longer term. So we are within that wave, the weekly wave. So what I'm expecting Euro-AUD to go take that top. All right, so it's a longer term bullish trend which is just emerging over there on the Euro-AUD. All right, so I'm gonna look at that later on. This is going to be the best opportunity, okay, during the CPI numbers. This is going to be the best chart to watch. The reason It is at a best spot. Again, if I'm gonna look at the previous, what was the number at the previous CPI numbers? Right, so just to look at the date, so 13th of December, yeah, when we have seen some decent drop on the CPI numbers. So 13th of December, 10th of November, right? And if I'm gonna look at these dates, the CPI dates, the first gonna be the 10th, right? So 10th gonna be there. Yeah, there is the 10th. Okay, when CPI numbers drop, bang on, we have seen a nice sell-off opportunities on the euro yen. Okay, so the move was with 3%, right? So almost 400 to 500 pip move we have seen over there on the euro yen. Okay, 400 to 500 pip move. And then the next CPI report going to be 13th, right? So 13th of December. 13th of December. So if I'm going to look at the December, there we have seen. Okay, so there we have seen a decent drop on 13th of December too. So we have seen, 200 pip move over there. All right. We were selling at that time too, right? We were selling at that time too. What happened? It slightly went higher. Okay, and then again we have seen a big move. So we were, we were selling at that time too. Both time charts are there on the trading view. All right, so I hope charts are there. So if you were following me on the YouTube, then I have posted some videos over there on the euro yen sell opportunity at this area, right? So might have a updated chart here. All right, these are the charts, updated chart. So let me quickly find out that when that tweak happened. Okay, this is the chart which I'm talking. We were selling, we were looking for a sell opportunity over there at that top. This is the time when inflation number came over there. It went lower, okay, but what happened after that? It went higher, okay. It didn't continue. Yeah, these areas, we were expecting short opportunities over there. It went higher, and then we started to look for it to drop from that 146 areas, and then the banging move came over there, right? The yield curve, the yield curve, the Bank of Japan changed the band. Yield curve band. Okay, we have seen a big drop over there. Then it went in a sideways. We have seen a couple of sideways opportunities. Well, a nice opportunities over there on the euro yen. All right, there we can see. So again, you are having the similar opportunities just setting up over there on the euro yen. Okay, recently we were selling this breakout to when the Credit Suisse crisis emerged in the Switzerland. Okay, that breakout happened over there. We got that nice opportunity over there, that breakout opportunity. So what is my point? The point is that you are having a similar opportunities just emerging over there on the euro yen. All right, and you're looking at similar breakout CPI numbers to fall below 5% or even 5.2%. Okay, again, similar like the dollar yen chart breakout opportunity. If I'm going to pull out breakout from the current price, obviously it's not going to break out from current price because we're still going to have 2 days. All right, and stop behind that. All right, breakout. If breakout is happening from current price, then breakout from current price. Okay, if breakout is not happening from current price, then slightly push more higher, tag that previous top, and then breakout from there. Stop just behind that, behind 46 or where you're going to feel comfortable. All right, and the opportunity you're going to look for is to this previous low. Okay, 139, 138.50. Your target going to be those areas. So our longer term, target is much lower. Okay, but the breakout opportunity you're going to look for from there, start behind that, gonna last up to these areas. Okay, so these areas, that's the opportunity you're looking for up to this previous low. And in best, if we are going to see trending move, okay, then remove the oil lag. Okay, remove the oil lag. Oil lag is just there. Okay, that's the target, longer term target. Continue to keep dragging lower. So have to hold that trade for much longer for price to reach over there up to 125. Okay, it's a longer term opportunity, not short term. But the short term opportunity I'm just showing you over there. Okay, a breakout opportunity and euro to drop. Okay, this is gonna be the best pair to watch, specifically during the CPI numbers. Okay, so if I'm gonna look at the other yen pairs, they are not at the top. This is the euro yen is at the top, or the chief yen. Chief yen is not the best opportunity. Okay, but that also gonna fall. But this is going to be the best opportunity because the chief yen is still trending for upside. So euro yen is not trending. Okay, euro yen is just staying sideways since we can say that since April 2022. Okay, so since April 2022 it's staying sideways within these ranges. Okay, within these ranges. So not a risky pair, we can say that. So this pair is just simply offering you a nice decent opportunity over there on breakout. So you're watching this pair very, very closely. Yeah, close to the weekly top. Is there possibility for this pair to break out and continue to keep pushing more higher? This top, this previous top, is there any risk for that? Any reason and any chance for the price to break out this top and continue to keep pushing more high? I don't see any logic behind this breakout for the euro yen to break out and go higher. If we're going to talk about some fundamentally why it's not possible, as I said, banking crisis has already emerged, all right, and ECB is still lagging. Okay, ECB is still not the only risk. Okay, let's just talk about that. The only risk is in the UK for stronger pound, right? So we can see that the inflation is still significantly higher. So repricing, this is I call that a repricing gap. All right, that's a repricing gap. So 6.15, 3.4, 4.2. Okay, so this is the biggest risk right now. So 3.4. Okay, so in Japan, the biggest repricing risk is in Japan. All right, so so next week we're not going to have repricing risk in the USA. In Fed is not going to have a repricing risk. What is repricing risk? So repricing risk is that the inflation is still going higher. Okay, but the central bank still struggling to raise the interest rate. Okay, they are still inflation is just out of control from the central bank, right? Inflation going higher, and the central bank is still looking to raise the interest rate to bring down the inflation. Okay, that's a sign for the stronger currency. All right, once these numbers fall below zero and goes into a negative territory, means that the central bank is ahead of the inflation. All right, then there is no risk for inflation to rise further. Okay, means that the hiking cycle is just close to end. Okay, the hiking cycle it hasn't end yet in the UK and in the Europe. All right, and of course these countries are still having a repricing risk. Okay, but what can happen? Inflation can fall very, very aggressively in these countries. All right, rather than for ECB to go and raise the interest up to 10%, all right, they can raise for another time up to 4%. Okay, and then inflation can, because the economy is already fragile in the Europe, all right, and they may not have to go far away to bring down inflation. Inflation can already, inflation can crash very, very aggressively to the downside. So the risk is. So still risk is to the upside in the Europe and UK, all right. But as we can see that the yields found their top. So the US yield and interest rate, that is more important than the rest of the world. Okay, they are more important than the rest of the world. So I don't see that the breakout going to happen for more upside. There is no logical reason. So we're going to see only drop to the downside. So what makes the case here, the case every time when you see that the price is coming closer to these previous tops, okay, coming close to 146, 140, 45, 50, it's just simply setting up for a sell opportunities, and you're looking it to sell and continue to keep dragging lower. Yeah, that's what these are the trades you are looking. All right, these are the trades you are looking every time when it comes to close to the previous top. and you are looking this trade next week. All right. Hopefully we can get that opportunity next week. Finger crossed. Yeah, breakout, or even if it tests that top. This is gonna be this is my favorite pair next week. For not just for next week, for next couple of weeks. All right. All right. So pound yen is also gonna be the similar pair. All right. So you look in this daily. Let's just talk about in a different way now. Okay, let me show you the policy gap. All right, so the policy gap, you're gonna see the policy gap here, this chart. So I'm gonna pull out a pound chief. All right, so there you can see the, usually these charts doesn't go follow each other. Okay, there you can see. Yep, pound is just falling against the yen. Pound was falling against the chief. Okay, but what happened here? Something has happened here in this area. Within this, pound was rising against the yen, but pound was falling against the chief. And this is a policy divergence. Okay, you clearly can see that the policy divergence. Okay, Bank of England was raising the interest rate, and at the same time, Swiss National Bank was also raising the interest rate. Okay, that's the reason pound was falling against the chief, but pound wasn't falling against the yen. Okay, what's going to happen? So we're not going to see strength on the pound against the chief. Pound not going to rise aggressively into that direction. Okay, what's going to happen? The pound going to fall against the yen. Okay, the policy shift going to come in the Japan, not in the UK or in the Switzerland. They have already done their work. Okay, but Bank of Japan hasn't done their work to combat the inflation, to bring down the inflation. All right, so that policy gap gonna shrink, and we're gonna see a big drop over there on the pound. We have seen that previously as well in the past. Okay, somewhere there within these areas. So what you're looking, the longer term picture still same, looking for the pound to drop, and this daily correction to break down and continue to keep dragging lower. So the next week trade is already also similar like the euro yen. Okay, so similar move, breakout, CPI numbers, breakout opportunity, stop behind that, keep dragging lower. Okay, if correction is getting bigger, you are just simply looking for that flag to extend up to that previous top, and looking for a breakout from there, stop behind that, and this move to continue to keep dragging lower. So in case if pound slightly push more higher, it's not going to change. Again, if I'm going to pull out my pound chief chart there, okay, you're getting a lead from the pound chief chart. As long as pound chief chart is just dropping, you're looking a strength or your weaknesses over there on the pound against the yen. Okay, so trade still gonna be the same even if CPI number is not going to impact on the yen. Okay, so the trade still gonna remain the same. That trade, right? So if this keeps falling, this trade gonna be over there. All right. Oh, that makes sense. So similar trade like these two pairs gonna be at a good spot during the CPI numbers. All right. So breakdown and continue. So big move we can see on the dollar yen. I mean, like 500 pip move or 700 pip move can appear over there on the dollar yen if CPI numbers are really going to drop below 5%. There you're gonna pay attention. Yeah, similar move gonna be on the euro yen. 500 or 500 or 700 pip move can appear over there on the euro yen. Yeah, big move. If it goes to 27, it's gonna be a 500 pip move. All right, so you're not going to have a 500 pip move on the Aussie yen. All right, so maybe 200 pip move or 2.5. All right, so again, you're going to have you can see policy lag here too. If I'm going to pull out the Aussie chief, yeah, policy lag is also there. There you can see there where the euro yen is supposed to be. All right, so euro yen supposed to be at this low. Aussie yen supposed to be at this low where the Aussie chief is right now. That's a policy lag. This is the policy lag between these two. Yeah, it was following previously. No policy lag was there. Both currencies were just going in the same direction, but something has happened here within this area, and we have seen the policy shift, policy divergence came over there within this area. So USD yen went higher and USD went lower. Yeah, this policy lag not gonna stay over there for much longer. Okay, we're gonna see shift, a shift from the Bank of Japan. That's a longer term picture, all right, and that's the reason we were expecting this trade law in the previous, when we had that correction. So we got that trade, we got that breakout opportunity over there. So what you are looking next week, we don't have a perfect opportunity on the USD yen, okay? But if breakout gonna happen over there during the CPI numbers, you're simply looking for a breakout opportunity over there. Not a best opportunity, would not suggest you to just go after that, okay? But it can break down and can continue to keep dragging lower if inflation is going to really surprise lower. If inflation doesn't surprise, guys, let this just go back up, okay? Form that flat formation, stay below moving averages on this daily time frame, and the opportunity is already being shown over there. Okay, this is longer term opportunity. So short term opportunity gonna be on lower time frame there. All right, so let me clearly explain that chart. All right, so that can extend up to this previous top, all right, before going to break down. Okay, so you're gonna look for breakout opportunity. Obviously not gonna happen from the current price. All right, then if it goes there all the way up to this previous top, all right, again, understand that the breakout opportunity gonna be during the CPI number, during when CPI number is gonna released. So don't just go after the market before that. Don't buy or sell before that. Let the setup mature. Let the price, do what it is doing right now, and let the pattern be clear ahead of the CPI number. Once CPI number is going to release and going to surprise to the downside, you're looking for a breakout opportunity. Yeah, if CPI number is not going to do anything, ignore the breakout opportunity. Let the market just complete that flat, and then you are looking, a big wave to the downside, which is being shown on this chart. All right, so we were expecting this to break down too. So it's just falling from that top. Let me see if I do have these charts, I'm gonna drop in longer term. They are in a sideways market. Kiwi yen, Aussie yen, and Euro yen, and pound yen too. Okay, we got that move. All right, so we got that move. So that's the bigger picture. Bigger picture still the same. Okay, if we don't see breakout there, we don't see that, and it goes back up, this is going to be the move to catch for longer term, right? CPI numbers, 4-hour time frame, breakout opportunity, correction slightly can get bigger. All right, slightly can get bigger, can continue to keep rising all the way up to this previous high. Rectangle, this previous high, you're looking for a breakout opportunity from there. Take out, stop behind that, and continue to keep dragging lower. If it does not visit that previous high and break down, continue to keep dragging lower, just ignore that. You have a couple of other good charts to follow: Euro yen and pound yen. You can watch them, and you can chase them rather than chasing this. Euro dollar chart is also going to be over there. All right, or this chart, or the CAD yen, you can go after. Okay, so falling from that previous high, went higher. I haven't updated. We were expecting again that's the move which appeared over there because of the CPI number. Yeah, we were expecting it to drop, and it's dropping. Okay, so on the daily chart, there were a couple of short-term opportunities on 4-hour time frame happened over there. We have seen at the start of the meeting, the weekly market outlook, this chart, okay, so broke down, went lower. So again, do we have a lag over there, policy lag? Yes, we do have. If I'm going to pull out the catch if chart over there. All right, which direction it's supposed to go? Yeah, what was happening over there before this inflationary move? Nothing. Both were going into the same direction. But what happened over there? Something happened over there. Policy divergence. Okay, CAD went higher because of the oil crash happened, or oil spike happened. Policy divergence came. Central bank started to fight with inflation. CAD went lower, and CAD went higher. Yeah. So where price supposed to go? This way, this low supposed to be taken out in longer term, where the catch is right now. Okay, so this policy divergence will play out in longer run. So the trade, okay. So if I'm gonna pull out my let's go to this clean chart. If I'm gonna pull out the CAD yen, if I'm gonna remove, and if I'm gonna pull out oil chart, which caused CAD yen to gain. All right, so the whole wave started from there. Okay, when we have seen, negative oil prices. Okay, CAD yen went higher, oil went higher. Okay, oil dropped. Oil has already taken this previous low. Okay, $60, $65 mark. Okay, we can see oil has taken out. So CAD yen hasn't taken out that low yet. Okay, and that's our target for longer term. That's our target. That's the target. This low target. Okay, where the CAD yen is right now, CAD yen is struggling at this area. Okay, CAD yen is struggling at this area. Yeah, makes sense. CAD yen is just lagging behind that oil move. I'm gonna pull out some indicators on that. Okay, I'm gonna pull out some indicator on that. So we have seen there that the oil broken down. Okay, broken down this. Here we can see oil broken down these moving averages. All right, but CAD yen hasn't broken down these moving averages. So CAD yen has to break down these moving averages. Right? There you can see. There, let me remove. Okay, there you can see that the oil went below the moving averages. All right. Okay, so CAD yen is still staying below those moving averages, struggling. Okay, so oil went lower, very well. The CAD yen is still struggling over there. It has to go down below the weekly moving averages. So when I say weekly moving averages, means that there is a lot of potential left over there. All right, so if I'm gonna remove that. I'm gonna go back to CAD yen. This is by the way longer term move we are looking. So that's far away, but you are right now looking. This is the target, these areas. Okay, for medium term, these are the targets for your medium term moves. Now let's get back to the 4-hour time frame where the opportunity gonna be. Again, no a science over there, simple analysis. Okay, flag is just emerging over there, flag to get bigger. All right, if I'm gonna pull out my rectangle, that's gonna be the rectangle top. That's up to which level price can correct, that flag can correct. Okay, what you're looking, CPI numbers. Yeah, CPI numbers, CPI to fall below that 5.2%. Okay, fall below 5 or 550, whatever. Fall. Why fall below 5, guys? The Fed, let me talk about this first. Why we are talking about that 5, below 5 again and again. Coming back to the inflation chart, inflation and talking about that to fall below. All right, so I'm gonna look at this first. That's the inflation chart. Okay, so US inflation and line chart. And if I'm gonna pull up on it the the interest rate, USINTR, USINTR on it. Okay, there we can see that the crossover is just coming over there. This is not updated. USINTR, it is at a 475. So the interest rate is 5. All right, so interest rate is at the 5. So, but hopefully you're gonna understand that. All right, so inflation, inflation back in 2008 was 5.5. Okay, and interest rate at that time is here, right? Or 5.25. Okay, there, 5.25. So went lower, inflation went lower significantly. We haven't seen further hikes from the Fed. We haven't seen further hikes. Okay, so once inflation gonna fall below the interest rate, okay, once inflation gonna fall below the interest rate, so Fed may say that they have done hiking the interest rate. Okay, they may not raise the interest rate anymore. So hiking cycle gonna be over. So there are many examples. Okay, in 2000 we can see, then 1990. Okay, there, and then 2000, then 2008, and then this is the just current one. Okay, up the 2023, the recent one. So Fed fund rate is at the 5%. This chart is not updated. Okay, the chart is not updated. So 5%, and inflation is also, it is being expected that inflation is going to fall below 5%. So inflation and Fed fund rates going to be even. All right, so going to be neck and neck. So they're going to be less likely further hikes from the Fed above 5 when inflation going to fall below the 5%. Fed can say that inflation is doing well, blah blah blah, yeah, improving, falling below our target and coming towards our 2% target. Yeah, we are above the inflation now. The inflation headline inflation, yeah, but core is still high. Yeah, blah blah blah. But they're not gonna raise the interest rate. Okay, and that's gonna be the good one. Once they're gonna say that they are pausing the interest rate, that's gonna be a perfect picture for the yen to start gaining and policy lag to be over. Yeah. So again, buy a sell opportunity, breakout, stop behind that, this target. All right, and if you're gonna have a stronger aggressive sell-off, then continue to 95. Okay, if we don't get that breakout, no need to panic. Then let the CAD yen to push slightly more higher. All right, like I have shown you oil chart, push more higher, and then again we're gonna start looking for a sell opportunity. Okay, green box is just showing what to expect from that high. Yeah, this is going to be the, yeah, so chart is just clearly showing what you are looking for longer term on the CAD yen. So guys, the focused chart, I'm spending a lot of time on the yen pairs, okay, because there are going to be the opportunities for longer term. There you're going to see the return. All right, you're not going to see return on the other pairs. They have already moved. We have seen movement everywhere. Oil moved, many charts they have moved. Okay, so chief yen also going to be the similar move, similar chart, but I would suggest you to just ignore that because chief is still strong. So this is what I'm expecting on longer term, but you still, so all right, so this is also, you're looking similar move. Okay, breakout and continue to keep dragging lower. Yeah, NOK yen, I'm gonna go on. I'm gonna look at the SEC again. Okay, so breakdown and continue to keep dragging lower. Breakdown, if it doesn't break out, breakdown and go higher. This high, okay, this high, test that high, and then again drag lower. All right, and Euro-CAD. Okay, so we can have opportunity on the Euro-CAD to Euro-CAD is just simply going higher, okay, on this at the start of the weekly market outlook. I have shown that chart, okay. We are going into that direction. This is our longer term target, okay, 160. So it's a long way to go. It may not, go sideways. It can continue to keep rising aggressively the way it is rising right now. Okay, the trade you are looking going to be this next week. Okay, it's going to be the opposite to the CAD yen. Okay, this is the opposite chart, opposite trade. Okay, so breakout is just happening, and you look in this to break out and continue to keep pushing more higher. Test that, break above that previous high. Okay, so the trade is very much similar like the Euro Oz. We have just recently seen that trade here. All right, so this is a similar trade. Okay, this is a similar trade. You can see the dates, even same 3rd April. Okay, we have seen a strength on the euro and weaknesses on the Oz. This is a sign for the risk, off move. All right, this is a sign. This is a sign that the CPI numbers are going to drop significantly next week. By the way, okay, this move which we have seen over there, this is telling us that the CPI numbers are going to be surprised to the downside of the market. Yeah, so this is a risk of move surprise. Okay, so you look in this to break out and continue to keep pushing more higher all the way. Similar move. Okay, the move you have just seen there, that move. Okay, what you are looking for, price to just stay above the moving averages like you have seen over here. All right, price remained above the moving averages. We can slightly move on the bigger time frame, right? So on 8-hour time frame, so price to just stay above those 8-hour time frame moving averages here. Okay, and continue to keep rising all the way back to this top, and like we have seen breakout here. Okay, we have seen breakout here, break that top. The price hasn't broken out that top yet. All right, so we may see breakout of that top. This top. So yeah, so what is the change in formation possibility on the CAD yen? Okay, CAD yen, there is a possibility that the price slightly can drag lower. Okay, drag to this low, or let me just show you on this chart. Okay, make sure you are prepared and ready for that possibility too. Okay, so Euro-CAD. Okay, so what I have shown you here on the CAD yen still can push more higher. As said, if inflation numbers are not going to be as good as we are expecting. Okay, so simple, we still may see another leg lower. When you're going to buy for the Euro-CAD for that one more leg higher, I don't think so Euro-CAD going to drag lower. Okay, but this move, okay, that move can happen like this. Okay, then again drag, then again Euro-CAD to continue its bullish trend from there. So make sure you prepare for this, okay, and higher move for that. So if you're gonna get a breakout on the CAD yen, the breakout I have just shown you for our time frame, you're gonna see continuation. Okay, this is more likely move. This is more likely move. Okay, this is less likely. This is not gonna happen. Why the bullish move is more likely? Because we have seen already strength on the euro against the Australian dollar, against the New Zealand dollar. That's sending a strong signal that the euro are also gonna rise against the CAD. Okay, and we're gonna have that bullish move, the move which I'm showing here. Yeah, that's what you're looking. The CAD chief to just keep dragging lower. Not a best chart right now. It has already made its move. All right. So I would love to see that wave on the CAD yen. This wave, the wave which you have seen on the CAD chief. Okay, but on lower time frame, on the CAD chief, the current time frame, CAD chief to just simply break down that previous low. Not a best opportunity, not a best chart. I would suggest to just simply stay away from the CAD chief. Euro-CAD much better, or you can chase this chart, okay? Pound chief. All right, so this chart, okay? So we may see breakdown and continuation to the downside. If that happens, I would suggest you to just simply stay away. Though you can trade on that move if you are good enough, okay? Or let the price tag that top and then you are trading, okay? If this breakdown comes, then better go long on the Euro-CAD or go long on the Euro pound. All right, so I'm anticipating it to just keep dragging more lower. That's just this formation. It has already broken that ABC move. All right, broken out that ABC move and looking for this to just keep dragging lower. If it doesn't continue, test that top, this move. All right, so yeah, you can look for this to go higher. If you fail to catch the pound chief sell off. All right, so tag that low. Not a perfect opportunity, but still going to be good enough to catch, okay, up to this previous high. All right, or look at the lower time frame and look at the lower time frame and watch these areas, okay, these previous lows, and price to tag them, then continue. Okay, Australian dollar and New Zealand dollar is falling and coming into a place where you can pay some attention on it for long opportunities, okay? Buy opportunities can happen here within these areas. It's a long sideways market. Every time when we have seen that the Australian dollar came within these areas, we have seen buy opportunities over there, right? These are the areas where you should pay attention for buy. All right, that's the buy zone or longer term support works here. So you shouldn't follow at the current price. Let the price fall back below 5. Okay, let the price fall up to 5 at least. All right, or below 5. 103.5 is a best place to look for longer term buy opportunities. So you're looking it to drag more lower and then looking for this to buy. Yeah. Aussie-CAD continue to keep dragging lower, okay, like that triangle, that 4-hour moving averages, and continue to keep dragging lower to this previous low. Not a best chart, so I'm going to ignore it. All right, same EV-CAD, not a best chart, so we are right now ignoring these charts, okay? But this is the move we are looking for, another leg higher and then drop. Euro-Chief, not a best chart, okay? So hit that low and then go back up. Green box. Euro-Aus, not a best chart, all right? So the move has already happened, guys. To be honest, on this chart, you shouldn't yes, you can counter that, but going against the trend is really, really risky and dangerous on the Euro-CAD. Why? You can get a trade on it, all right? But this is what can happen. This is what can happen. So based on my experience, all right, we were expecting sell opportunities over there, but what happened? Crash. Spiked. Australian dollar crashed. Then crashed and then started to fall. So we are preparing for a similar move, okay? Spike can happen over there on the Australian dollar, on the euro against the Australian dollar. And then price went lower. So, when you are going to counter it, it can stay in a sideways market like we have seen here. It can stay into that sideways market. But there are more chances for the recession to hit, okay? Once that recession gonna hit, you're gonna see spike. Okay, recession hit back in 2008. You have seen that spike. Recession hit back in 2020. We have seen that spike. Recession wasn't hit, but significant slowdown has happened over there in 2016. We have seen spike. Okay, so when you're gonna sell it to the downside, you're actually risking that spike. All right, and sometimes even your stop loss doesn't work when that kind of spike happened. All right, so yes, be prepared for that. It's gonna happen. All right, so if I'm gonna go to this daily chart, just to let you know that what move was there. All right, so the wave has happened. So recently we were expecting it to go down past that previous low and give us a buy opportunity over there. All right, so we were expecting that to continue, but it didn't continue. Then went lower, tested that low, and then we have seen, the current move, which is just happening over there on the Euro-CAD. Okay, this current wave, it is still going higher. Okay, and there is a good chance that the price can break through the top and continue to keep pushing more higher if again inflation is going to drop in the US. US inflation is really important. Okay, so if inflation is not going to drop, then you can counter, okay, for these moves. You can counter that previous top and can go against the trend with tight stop loss. And if it continue to drop, then there is still a chance that the Australian dollar can fall up to this low, right? This low, it can fall up to that low. But when you are going after that trade, that's going to be a counter trend. Okay, make sure you understand that there is a risk for spike up, like I have shown you. Same goes with the Euro-CAD, Euro New Zealand dollar. We were expecting it to continue. All right, that wave happened. All right, so looking for buy opportunities within these areas, and price, found its floor over there, and we have seen the bullish wave over there on the Euro New Zealand dollar. Okay, it has almost finished or completed its bullish move. Okay, there is a chance that the price can break out and continue to keep pushing more higher all the way up to these areas. You can counter, okay, you can sell, you can look for sell opportunities, and but understand that you're looking for a short-term sell opportunities, okay, not a longer-term opportunities to the downside. The longer-term opportunities to the downside is not going to happen. All right, we already hit the max in the inflation. So we are in a disinflationary environment, and that disinflationary environment gonna push this pair for upside. Okay, counter trend is possible. This counter trend move can happen over there. All right, so when you're gonna trade after that sell opportunities, then trade with care. I'm anticipating it to break up, all right, and continue its bullish trend for upside. So you pound Australian dollar. Someone was asking that how far that I can go. All right, the far is just simply the high is there. Okay, I'm not going to, don't be afraid. All right, don't be afraid, but be prepared for that can happen, right? Why that can happen, let's just talk about that way, why that can happen. So if I'm going to pull out on Australian dollar, I'm going to remove that and gonna open another box here. So I'm gonna look at this. This is a yield curve chart, or 210 yield curve chart. Okay, so every time when we have seen all right, so every time when we have seen inversion, okay, if I'm gonna draw a box on this, this is gonna be the all right, okay, where there we have seen inversion. Okay, that was the bottom, and there we have seen inversion. All right, there, that was the bottom. Okay, and just recently we have seen strong, deeper inversion. Okay, and we have seen bottom over there. So what happened after that inversion? Okay, so this inversion cannot stay there, right? This is the simple logic or simple answer. This cannot stay there. All right, so the longer term rates, the longer term rates or US 10-year yields cannot stay below 2-year yield. Okay, so the system can only work if longer term rates stay higher than the short term rates. Then we can say that the lending works. All right, the credit works, the credit flow works, the credit works if higher rates. Then banking system can work. We can simply say that then bank can lend for profitable activities. Then simply we can say that if higher rates stay above the short-term rates, then bank can make profit. All right, then banking business is profitable. All right, so this cannot stay there. So short-term rates have to fall. Okay, when short-term rates gonna fall, 10-year yield gonna go higher. The longer-term rates gonna go higher. When longer-term rates gonna go higher, we're gonna have recession. Okay, we had recession there. That's within that box. Let me draw a box over there. Okay, we had recession within that box. We had recession within that box. All right. So when we had that recession, pound went aggressively higher against the Australian dollar. Okay, again we had that recession, pound went higher aggressively against the Australian dollar. Australian dollar simply is a risk on currency, right? Pound is also a risk on currency, but pound is considered to be more safer than the Australian dollar. That's why it went higher. Okay, again inversion, we are expecting inversion to be steeper. All right, this to be steeper. Okay, this arrow to be steeper, and similarly we're expecting this to go higher. How higher? It will depend. All right, it will depend how quickly, how aggressively central banks cut the interest rate. All right, but yes, window is clearly open over there on the pound to break this previous high or that previous high or all these previous high. Okay, window is clearly open. It can continue to keep pushing more higher and can break all these highs. Hopefully you understand that. What is the direction on the pound Australian dollar? Okay, when inversion, when yield curve cannot stay inverted, okay, it has to go higher. It has to go higher. It cannot stay below that 0%. It cannot stay below that and has to go higher. So similarly, pound Australian cannot stay there. It has to go higher. Yeah. So how high? We'll see how, it depends how worse the recession is going to be. The worse the recession, the higher the pound going to be against the Australian dollar. Yeah. So is there a possibility for the pound to fall for a daily wave to the downside? Yes, there is a possibility. Okay, we still can see another leg lower up to this previous low, but it's going to depend on the pound. Pound, just follow the pound chief. If pound chief followed a drop, that's the previous low, you're gonna see another leg lower on the pound against the Australian dollar. All right, but right now what you are looking, pound to just take out that high, this high, the oil, when oil spiked. This is the oil crash. All right, so oil has already taken out that low, right? Oil chart has already broken below 65. But the pound hasn't, pound dollar hasn't, broken above that high yet. So you still may see continuation for more upside. All right, so short-term continuation on the pound Australian dollar. Price to hold moving averages, the 4-hour moving averages, simple trending moves are just happening over there. The price to just come within the moving averages, hold like it held over there, all right, and continue to short-term opportunity, that top, and continue to keep pushing more high up to 92. Okay, so when you're selling pound against the Australian dollar, make sure you understand that what can happen, which way it can go aggressively. It can go aggressively for upside. The risk is there for crash. Okay, same goes with the pound New Zealand dollar. We were expecting it to go higher. It took a lot of time, a lot of time. And by the way, it has given short-term buy opportunities at that time. So if I'm gonna go to the pound Pound New Zealand dollar. Yeah, there. We were expecting it to go higher, so it took a lot of time. Some people just exhausted trading on this, so waiting for that wave. It was giving some short-term buy opportunities. Yeah, every time coming, giving short-term buy opportunities over there within that green box. And yeah, so finally broke out and went higher. So what's next? So not a best pair to the trade was there simply. Yeah, this wave which is just appearing over there, we were waiting for that to happen from there to there, and that wave is just simply happening. So similar again. Okay, how high it can go again depends how hard the recession is going to be. Yeah, long it can go further, far away. So what to do? Moving averages, short-term trading on it, test the moving averages. Yeah, so short-term buy opportunities were there. Okay, there we can see. So come, hold, and continue to keep the trend for upside. Yeah. So pound CAD, yeah, we may see another leg lower, like pound dollar chart, which I have just shown you. All right, so you're looking for this move to happen. Okay, so breakout can happen when you are going to counter it. Okay, this chart has also need to tag that high. Okay, so breakout can happen and can continue. You need to watch a price action over there on lower time frame before you're gonna look for this move. Okay, so I have shown you drop on the pound chief. Yeah, bullish on the euro pound, drop on the pound dollar, drop on the pound yen. All right, when you're gonna have drop on all those pound pairs, so this is also gonna drop too. All right, so understand that. Okay, but the direction is longer term bullish. So Aussie chief is like that. All right, like that. So not a best pair. I'm gonna simply ignore. We still may see more downside. It can continue to keep dragging lower or a bigger daily draw and daily move higher. All right, same goes on the Kiwi chief. Continue to keep dragging low. I'm gonna ignore. Okay, so this is the pair right now. This is a longer term picture, guys. Okay, we were expecting it a buy opportunity. Okay, but what happened? It went lower. It broke that low. But this is the wave which is gonna come, guys. This is the wave which is gonna come over there. That's for sure. Okay, may take some time. Yeah, that may take some time. Need a lot of patience over there to trade on it. Okay, so let me tell you why we are expecting that wave to come. First of all, what has caused that drop? What has caused dollar to drop against the peso? All right, so that's the reason. The policy is so tight. The policy is extremely tight in the Mexico. But we are reaching the policy is just policy has reached its limit. All right, there we can see. So back in 2020, all right, back in 2020, that was the floor. Policy was tight. We can say that inflation was under control at that time. Okay, then what happened? Bang, inflation came. And then there is the interest rate aggressively. Okay, now inflation is lower than the interest rate. Okay, the interest rate is 4.4% higher than the inflation. Okay, interest rate is higher than the inflation, significantly higher than the inflation, 4.4%. All right, so means that they have raised the interest rate significantly. They have gone so far away. The Mexico has gone far away to bring down the inflation. That has caused that move. That has caused the dollar to drop against the peso. All right. So what they're gonna do? They're gonna cut the interest rate. Right? They only gonna cut the interest rate. they're gonna go after the growth. They are simply killing the growth. All right, and once they're gonna go after the growth, they have to cut the interest rate. Once they're gonna have they're gonna cut the interest rate, we're gonna have spike, okay, or recessionary move. This is a recessionary move, and that's gonna be the recessionary move. All right, and we're gonna have that aggressive move over there. So hopefully you understand that. Okay, so we're gonna have similar kind of, it's a longer term game, it's a longer term picture. You may not get that trade next week or so, all right, but that trade eventually gonna come. That wave eventually gonna come, and when that wave gonna start, it's gonna be a very, very quick move. Okay, I'm just looking at the dollar rand. Okay, this is the move we're gonna see. All right, like that wave. All right, so if we're gonna look at the dollar rand has just gone, taken that wave, but this bank has gone opposite direction. They have tightened the policy too aggressively. All right, so this is the wave which is going to come over there. So how to trade is the question. Okay, so the trade right now it's so difficult because the price is just simply trending to the downside. Okay, and once some the risk off move happens, it rises very, very aggressively. Okay, you're paying attention every time when it is testing the previous lows. You are expecting again aggressive move to happen and price to find its floor and continue to keep spiking for upside. All right, so have to be right now. It hasn't found its floor. It has found its floor. Okay, it has found its floor there, held it a couple of times, went higher, but we can see over there finally it broke down and went lower because policy is too tight in Mexico. But eventually they have gone far away. All right, so they are about to stop. So a dollar rand is trending for upside. Okay, and we are just simply expecting the trend to stay intact, and they have also gone so far. Okay, Bank of South Africa, they have also gone so far. So all these banks, they have done their hiking cycle. All right, so if I'm gonna look at they have done. Okay, so they have gone above the inflation. They raised the interest rate above the inflation, so they're only gonna cut. Okay, and we're gonna see a trending move on upside. A bit of tricky right now because correction is just going on. Need to pay attention for that daily moving averages to hold and trend to continue. All right, so those were the currencies, guys. So if I'm gonna look at the yields, okay, so yields to fall simply. Okay, yields to 2-year yields to stay below those moving averages. Okay, and next week when inflation numbers gonna come, then bonds to rise. Okay, and yields to fall. That move. 10-year yield again, same. 10-year yield to stay below the moving averages. Okay, so next week when inflation gonna come, stay below, hold those moving averages. Okay, and that's gonna be the trade. And bonds to rise. Okay, ETF to rise. Whatever you are trading, if you are buying bonds, okay, bonds to they're gonna be a buy on bonds. Okay, and if you're trading on ETFs, then ETFs to rise too. Okay, and yields to fall. Yeah, and this is a coin which is just holding the 12. Okay, if you are interested, and previously we were expecting a buy opportunity on this. Okay, we have seen some buying opportunity over there, but the buying opportunity we have seen was there. Now the creator of this coin is behind the bars. Okay, that's causing the coin to stay under pressure, right? But the trade we are looking gonna be that, guys. Okay, so the trade you are looking is first of all this. Okay, this short term, couple of buy opportunities were there. Many short term buy opportunities already has happened over there. Okay, that was the buy. That was the buy, right? So these short and buy opportunities has happened over there. That was a buy. That was just a buy. All right, and you're looking it to hold that previous low. A lot of people, a lot of buyers are sitting over there at these areas. Okay, and they are looking to jump into this chart at this area. So let me find NCBUSD LUNBUS. NCBUSD. There we got it. Okay, so there we can see a lot of liquidity is just sitting over there at 12 or 11 ET. All right, so you're paying attention to 12, and yes, 12 is going to be all right. 12 is the best price in case if it breaks down. Okay, this fraction breaks down and goes lower up to 8, still going to be a buy opportunity. Okay, so add more there at the 8. You can buy more coins at .0008. You can buy more there. Add more, than at least you're gonna get the first break even. Once you're gonna get more buy there at these areas. All right, so if it breaks down, fall, test that below, buy more, and once price gonna rise back to that 12, you can take that out. And in case if it rise very aggressively, yes, I'm expecting similar kind of move, and we'll see how the rise is gonna be on this chart. Okay, but it has already given short-term opportunities, guys, like I've shown you. All right, so, and this is also another coin, Quick also a good coin. The supply is very much limited, only 1 million coin, and still cheap, seems to be cheap. All right, and you are looking simply here. All right, so if I'm gonna look at the QUICK in this chart, you are just simply paying attention on these prices. Okay, there you can see 77 is the lowest where you're paying attention, or this previous low. A lot of buyers are sitting over there on this coin, right? And if I'm gonna go to and draw some box on it, okay, this is where you're paying attention, where we have seen the previous spike or previous impulse. We call that impulse. All right, so that's where you're paying attention, lads. Okay, buy opportunity within these areas, and a short-term target gonna be definitely these areas. Okay, and if a big spike is going to come, and then continue to keep rising all the way up to 150 or 200. All right, so this is a good coin. I'm having more coins as well, but I feel that this is going to be a good. So Bitcoin. So you have already seen the chart, the target, where what you are looking, 48, 50 areas. Remember, when you're buying the Bitcoin, so you understand that, you remember this when you are, trading on Bitcoin. This is the place, all right? This is the place where, within that box, all right? Fed, we can say that Fed was, raising the interest rate, and at this place within these areas, okay, Fed stopped hiking the interest rate. Okay, Fed stopped hiking the interest rate, and then we have seen slowdown. Okay, slowdown happened, and then we have seen crash there. Okay, or pandemic, and then we have seen easy monetary policy. Fed printed a lot of money and brought the inflation. Okay, and then we have seen this move. Okay, a big run on the Bitcoin. So right now, what trade you are looking, what wave you are looking on Bitcoin? This is the wave you are looking right now. All right, this is the move you are looking. Fed was raising the interest rate. Okay, pause came over there. You're looking yields to fall right now and Bitcoin to go opposite. Remember the chart I have shown you at the start? Yeah, I will show you again. Okay, so this is, so what I'm saying, okay, so Bitcoin still can drop for another leg lower based on growth fears. Okay, that's what I'm saying. Okay, so Bitcoin is rising because market is expecting that Fed is going to pause the interest rate, yields are going to fall, all right, and Bitcoin is rising just based on those, expectations. People are selling it from the top, all right, when it found its top over there. Let me find that chart. This, when the inflation peaked, all right, or we can say that Bitcoin was leading than the others. Where's the peak on the oil and inflation, blah blah blah, all those assets. Okay, it was falling from the high, and market was expecting that the inflationary move has happened on the Bitcoin, and tightening. It was setting up for the tightening cycle. All right, and that wave has happened over there. Yeah, so this is the we can say that the tightening cycle wave that has happened. Now we are looking for policy to change. All right, this is going to the opposite. So this move, okay, let me make it clear the point I'm trying to make over there. Okay, so we may see similar kind of price action here. Okay, it can slightly need to adjust it. Okay, like this, it can go there. Yeah, investor, those who are buying the Bitcoin, they can keep buying because they are expecting that pause is coming, pivot is coming. Let's just keep buying, and then again, fear of growth, that can drive it again. How far that goes, we'll see, but this can happen. Okay, the next drop on Bitcoin based on the fundamentals going to happen. Okay, make sure you be prepared and buy based on that. If you're planning to buy the Bitcoin, buy based on that. Okay, and the chart which I'm talking about, we're going to get that chart from there. Okay, I have already shown that. Okay, that's going to be the target. This is the target you're looking. Bitcoin is just simply following the copper. Just go up there, right? We are looking that wave. Okay, this wave has already led us what is going to come, pause is going to come. All right, and the weekly chart. So what's going to be on weekly chart? Yield chart. Shown that at the start. We go opposite. Yeah, this chart. Okay, you go opposite. You drop yields. You drop Fed fund rates to go or Fed to cut, and Bitcoin to go higher. Okay, once we're gonna see that the rate's gonna close to zero or something like that, we may see a shock. Yeah, that shock, like this shock. That shock gonna be because Fed gonna cut the rate to support the growth. All right, and they may be late. They may behind the curve. We can say that. Okay, what you're looking on this time frame. All right, simple. Go to your order book and see where's buyer sitting. Right, BTC USD. Or let's say Tether. Okay, so check where they are sitting. Let the data come. 50 going to be all right. And 50 seems to be All right, so we're gonna get some buyers over there at 26. Okay, where my box is 26.80. Right, so 26.80 within these areas. All right, so still loading. All right, so 26.80 within these areas. You're trying to find some buyers over there at 26.80. All right, so 26.50. We got some at 25.50. Some buyers over there. You're looking buyers to appear over there at 20. This area. Okay, we call that a risk-taking area. So some buyers to appear over there at, or are you simply looking for inflation to drop, okay, and breakout to happen? Okay, if inflation is going to fall below 5%, you may see a sharp breakout on the Bitcoin, and it can continue to keep pushing more higher. It's just simply setting up for a breakout. All right, so breakout or test that box and continue to keep pushing more higher. Very much similar kind of analysis we're gonna have on the Ethereum. Okay, Ethereum to also continue to keep rising. Let's just go to the straight away lower time frame. All right, this box, hold that box. If doesn't test that box, okay, breakout. Yeah, I don't like that breakout setup or opportunity over there. Risk taking gonna be all right. So if breakout, you can follow, you can chase it. That's gonna be slightly tricky. But yes, if you already held that buy opportunity from these areas, these lows, then you are looking it to go much higher, right? Go much higher, at least up this area. Okay, so 3600 for longer term target. Okay, so another chart. You're paying very close attention on this chart. Not ready yet. Okay, this is not ready yet. We can see that the summer is coming. No demand, a lot of supply is over there on the natural gas. And what happened last time? Bang, we have seen that. I've seen a tremendous move on the natural gas after hitting the 150 areas. Okay, so after looking this chart, hopefully you understand that what is your plan, how to trade on this chart. What's the plan? Okay, so it tagged 140 at that time when oil went negative. Okay, so where it is right now, 195. Is it good to buy 195? No, it doesn't make sense to buy 95. Does fundamental support that buy at 195? Fundamental is not supporting that. Why fundamental is not supporting? Let's just talk about some fundamentals. What's happening in the Europe? All right, stopped. What stopped? Russian gas. All right, Nord Stream 1 stopped. All right, Nord Stream 2 stopped. So Russian gas is not coming into the Europe. All right, Russian gas may be coming into the Europe via Turkey in future. All right, because Russia is looking to make Turkey as a hub. So which gas is coming into the Europe right now? Qatar, and the most, the biggest supplier right now is the US. The US is supplying a lot of gas to the Europe, trying to replace the Russia. All right, so higher prices is not in the favor of the US right now, because the prices Europe was getting from the Russia was way cheaper than the US. So US is right now trying to replace the Russians as much lower, trying to supply them as much cheaper as they can, so that they can replace the Russians. All right, because of that, they are extracting a lot of gas. So a lot of supplies over there, which is causing that price to go down. And also we are having higher interest rates. All right, higher interest rate, and they are looking to bring down the inflation. So there are many factors which are saying that the natural gas still can go down. Right, it can go down up to 140 or maybe lower than 140. But yes, what is going to happen? It is coming where you should pay attention and you should look for buy opportunities on natural gas for longer term, even for short term as well. So I have, already made a video analysis on it, and I ask you to pay attention. But what you are looking some kind of sideways market on it. Sideways market going to be perfect because you can get a lot of short-term buy opportunities, and once price going to spike, and you can hold it for longer term. All right, so let this do. It's just 45 cent away from the previous low. 45 cent is not much. It can easily drag up to 45 cent to the downside, okay, and can find a floor over there at 140 or 150 areas. All right, so paying attention, this is the good opportunities it can offer you. Do not rush over there, okay? Do not buy over there at the current price, okay? It is not going to, you can simply lose money over there. So you can see our box is just sitting over there. We are waiting for this to again enter into 140 or 140 160 areas. Okay, 140 160 area is a really good area where price can hold. It can hold, because if it goes to 140 or 160 areas, then it's gonna be below the cost. Okay, it's gonna below the cost. I mean, so it's not gonna worthwhile to extract the gas at natural gas at 140. I mean, it's not gonna be profitable simply to sell gas to natural gas at those areas, at those levels. It's gonna be, I mean, the companies which are extracting natural gas at these areas, they're gonna lose money. Simple. Yeah. So there where you are interested to buy. So let this to go down, and you are paying attention over there to buy natural gas. Yeah. So you are looking it to go in a sideways. Obviously, you're not gonna see trend. Okay, you're not gonna see trend on it. As I have just explained to you, there are many factors which not gonna let this to go higher. First of all, summer. Okay, summer means no demand. All right, and there is a lot of supply, means highly likely we're going to see sideways market. And once you're going to see sideways market, there are going to be a lot of buy opportunities like that. Okay, so short-term opportunities like this, and that's what you're looking. Stay sideways and give you a lot of sideways opportunities. Obviously, once price is going to go there, you're going to have higher margin. All right, so it's going to be costly to hold it for longer term. You're gonna pay more to hold that trade. All right, so short term gonna be all right to trade over there. All right, so keep that chart at your top list. All right, so simply I'm gonna make it simple for you guys. BTC USD. All right, just look at this chart. There are many charts which are lagging behind the Bitcoin. Okay, if you are trading on crypto and looking to buy opportunities, charts which are lagging, and the most important thing is that reliable coins, not unreliable coins. Okay, so reliable coins, you are looking to invest in those coins. So it's just following. All right, so the Stellar is just following, and the target gonna be on Stellar gonna be this place. All right, so 5 cent move still can appear over there on Stellar. Okay, so they have to go after the Bitcoin. As long as Bitcoin keep rising, they have to follow that. They have to follow the Bitcoin. So the target, some of them have already tagged that this area, this place. All right, and many coins are just still staying over there. I mean, within this triangle or the sideways market, and that's the wave you are looking. Okay, so I'm gonna remove that. I'm gonna go quickly on other coins. Shiba is also gonna be a buy opportunity. Okay, like this chart is showing. All right, that's gonna be the trade you're looking. You look in this move. If it that wave. Okay, if it falls too low, all right, buy more, add more. Longer term opportunity, because slowing down, longer term opportunity. All right, this is also going to be a buy opportunity. Okay, in the box zone. And copper, someone was asking the copper. All right, so copper needs to fall. Okay, copper needs to fall. We are expecting it to fall, go down. A slight move can appear over there in that. So this is the daily chart. I'm expecting it to fall. Oil, still can slightly push more higher. Okay, up to you know, up to 90, these areas. All right, we are not, you know, oil is not a best opportunity right now. So I'm gonna ignore the oil. Okay, on equities. Equities, simply you are looking yeah, if inflation simply falls, then continue to push more higher. All right, so arrow and then more higher. This is where we are looking these to go. That's the target. Nasdaq 100 index. All right, so simply continue the trend. Okay, Nasdaq 100 index to keep pushing more higher. There is a correction is just appearing over there, that to go higher. You're not expecting it to fall. This is going to be the target. I have updated that chart many times. The way we are looking, all right. So go and hit that high. All right, this is the move you are looking. All right, so if I'm gonna go to lower time frame, you look at it to continue. If inflation goes higher, then we may see some drop on it, but again, it's gonna manage to get in. It's gonna sustain. Yeah, so it's gonna sustain that 4-hour time frame. 4-hour time frame trend to hold. Okay, S&P 500 also continue. Not this wave. Okay, we haven't got that move. Then this move, all right, this target, this is the target. So small caps simply going to be a buy opportunities within these areas, right? These areas, small caps, you know, that target. So Apple also pushing higher, so would not suggest you to chase the Apple. Okay, Microsoft is just simply pushing higher. Yeah, we were expecting Microsoft to go higher, so it's pushing higher, so it still can continue the trend. All right, so this is going to be the target on Microsoft. If you are trading, still, you know, some potential is left over there. This high. Okay, AMD is also pushing higher, right? So AMD going, but not like Nvidia, right? So going higher, but not like Nvidia. So pushing higher. So yeah, this was the previous one, updated chart, and still looking for a continuation move. Right, target is clearly defined over there. Fed pause, Fed pivot still can, you know, push them higher. Okay, this move. Moving averages coming over there. Hold. Moving averages to hold on 4-hour time frame, like previously held. Okay, clearly setup was there at this area. So hold the here within this box. Within that box, continue to keep rising. Nvidia was really quick. We were expecting it, you know, Nvidia to rise too. So now you can see that. Okay, what's the target? This is the target on others, on other, you know, tech stock. Nvidia already taken out, and AMD still behind. Microsoft is still behind, and Apple has taken out. Okay, Nasdaq 100 is also still behind. Still can continue this move. S&P 500 also can continue. All right, Dow almost tagged. All right, not far of it. Dow almost tagged already this place, yeah, but still can continue. So Amazon, Meta also going into that direction. So Meta, you know, I think that's the place. Meta also can continue its trend. So I think I haven't posted that chart on the trading view. So, but yes, still Meta to continue to keep rising. All right. So once these, charts gonna go higher, then you're gonna see strength on the Nasdaq 100 index. So these charts, these big names needs to rise. All right, these big names need to rise. Apple, Microsoft, AMD, Nvidia, Google, they need to rise. Amazon, Tesla needs to rise. So then you're gonna see the Nasdaq 100 index is gonna hit the target. So Meta also continue. Tesla also continue. Tesla, we were expecting Tesla to rise from that low, but what happened? It just crashed, and then then started to rise after that crash. So it crashed from 200 to 100, almost 100% drop, and then managed to gain its strength. So again, target gonna be this place, all right, or that place. Target is clearly shown here, 320 on Tesla. Okay, so what to do? Just simply, it's in a correction. All right, so hold that correction and continue its trend. We'll hold these areas. Okay, so that's what you are looking. Hold that and continue. Tesla to continue keep climbing. So still Netflix also going higher. Struggling, all right, so we'll avoid that. We do have some more coins, okay guys, so I'm gonna quickly look on rather than looking at this list. All right, there are plenty of coins. There are gonna be a lot of, look at that. This has already tagged that high. Yeah, this is the target you are looking for. So I'm gonna look at the chart, the trading view chart, where I have posted coins. So rather than looking at that list, you following. Okay, so Solana, right? So Solana also going to be a good option to look for it to go higher. Solana. Let's look at this. So Solana also going to be a good opportunity. All right. So what you're looking for, you see that it's just building the momentum, right? This is a sign that the momentum is going to come. I mean, breakout is going to come. Okay, and you're looking for this move, right? Breakout and that trade. First this target and then this target. All right, so looking to buy up or buy at these areas, right? Looking to buy within these areas at 16 or 18 or whatever, wherever you're gonna get the good chance to get in. Okay, so looking at, in case if it fall, which I don't see any reason, because Bitcoin is going higher, so I don't see this to go down. But in case if it fall and test that low, okay, so buy more and look for this to continue to keep pushing more higher. All right, so coins are already there, guys. I have already posted these coins. Just simply pay attention on these coins. All right, so they are exactly following the Bitcoin. Okay, they are following the Bitcoin. Let me check that. It is still at the good place. To this has gone higher and then went lower. All right, Doge also. No, this is also a good opportunity. DigiByte. Okay, so this is also at a good place. Couple of them gone higher. Okay, so Doge slightly went higher after after Elon Musk changed its Twitter picture, Twitter to, okay, ADA also went higher slightly. Okay, a good opportunity. These coins gonna follow, yeah, box. So I have already placed that green box. So you're looking for all these coins to hit that green box. Okay, this place. All right. Some of them, a couple of coins, they went aggressively higher. All right, so I think enough for this week, guys. It's a long session, 3 hour session. Okay, hopefully you got the idea what to do. So if I sum it up, inflation numbers are really important. Okay, if inflation drop up to 5 or below 5, you're simply buying the yen pairs. That's the opportunity for the next week. All right, so any question, guys? So moving, if you are looking for moving averages, okay, if you wanna follow the moving averages, go to my profile, right? Go to script. All right, there is the moving averages. Okay, go to there and just simply click on this button. All right, so click on that, make it. It doesn't say make it mine. All right, then if it, yeah, expand that, copy that, you know, better is this. Okay, copy that code. Come on, copy that code, copy, and go to your Pine editor. Just simply remove that and paste it, add to your chart. Okay, you got those moving averages. Simple. Yeah, simple how to get those moving averages. Go to there, copy that code, come back to your Pine editor, remove whatever you have already, paste that, add to your chart. All right. So thank you very much, guys. We'll see you back again in another weekly market, hopefully next week. If not, then during the week. And thank you very much. Have a nice Sunday evening and goodbye.